Everyone. This is Sherry. I'm your host for today's Traders Exclusive Strategy Series webinar. And on our show today, our experts are going to show you 3 simple steps you need to master to succeed as a trader, how to trade in the direction of the one force that moves price, how 1 hour per week can lead to steady monthly options income, and how to learn to trade a strategy that's immune to market volatility. I'm going to ask you to please check out our website, tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. That's also where you're going to find a recording of today's webinar. And of course, before we get started, I'm going to share our disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is never and not necessarily indicative of future results. So hold on to your hats. Please take notes that have a little bit of context and hold your questions till the end of the presentation. Everybody's going to be about a 45-minute time frame, and the last 4 or 5 minutes should be for questions. So I'd like to bring Simon Klein on with us today. He's with TradeSmart. He's going to talk to us about one simple adjustment to 7 times more profit. And Simon is the CEO and founder of TradeSmart. That's tradesmartforex.com, which has quickly established itself as a leader in trading education, training, and coaching services. TradeSmart is also a provider of market analysis services to professional traders. Simon is a professional trader and trading coach with over 15 years of experience. He's got a passion for trading, and he loves to train and coach others, whether they're complete beginners or even very experienced traders. Simon has taught and coached traders who work at the top Wall Street level, at the top Wall Street firms, and other professionals from all over the world, including doctors, accountants, judges, lawyers, pilots, managers, and business owners. And back in 2005, Simon began his professional trading career as an equity trader for Generic Trading of Philadelphia after passing the Series 7 exam of the Financial Industry Regulatory Authority. And that's just the tip of the iceberg. So let me give you over to Simon Klein. And Simon, I'm going to turn you into a presenter. I'm also going to show you as an organizer so you can see the questions and maybe keep them, if they come in before it's over with, you can also address them when you're ready. Can you hear me, Simon? Can we hear you?
I think it's
I hear you.
This one. That's good. Hi, Sherry.
How you doing?
Tell me you can see my screen. Doing good. How are you doing?
I can see it. I'm doing well. I'm doing well.
You can see this. You can see the right screen. I have 4 screens here. I hope you're showing. Last time I did this, I was showing the wrong screen.
I have one simple adjustment to 7x more profit.
Okay,
and then
that's
it's
good.
got our event details, and everything is looking good there.
So I will see in the questions area if people type anything. Yeah, if they type comments, it's in there. Yeah.
You should, because I've made just a little slight change there so that you could be able to see if someone has a question for you.
Okay.
But I did ask everyone to hold them until the end, so have at it.
Okay, great. Okay, we ready to begin?
Yes, sir.
Okay, thanks a lot, Sherry. Thanks for inviting me to speak here. And I'm gonna share with you today a simple adjustment you can make, and you'll be astounded if you actually do this, and that can potentially make you much more profit than you're doing at the moment. So here's a picture of me giving a presentation not so long ago at the New York Traders Expo when we could actually meet people in person. Hopefully we'll be going back to those times soon. And more recently, beginning of this year in February, I was invited to speak at the Berger Investment Forum in China, and that was also done online this time due to this current pandemic that we're in at the moment. So you can see I was invited among some even finance ministers of certain countries, I think, I'm not sure exactly, I think Japan, and other well-known speakers from all over the world. It's a quick disclaimer. I think Sherry's basically covered most of that with you, that all comments we make here are for educational purposes only, and everyone knows there's a high degree of risk involved in all types of trading. What I want you to do for the next 45 minutes is to turn off all distractions and focus on what I'm going to share with you. Get the most out of your time here. If you're here already, get the most out of it. Sherry already introduced me, but just to let you know that we primarily at TradeSmart focus on teaching you how to run a successful trading business and how to read the market professionally. And it's very important that you learn how to, or you actually develop your own trading plan and strategies which fit your personality and lifestyle. It's almost impossible to become a successful trader if you don't fit the way of trading to your personality and lifestyle. Here's our agenda. I'm going to cover with you what many people, I mean, it's very difficult to find this information anywhere, of basically how to run a trading business. So we're going to cover the trading framework, trading process, and talk about how to find your biggest trading demon. Then prepare to be shocked. Small adjustment to 7 times more profit. I'm going to share with you 3 steps to success. And if you do them, you should see success. And then we'll open up to audience questions and answers. I'll also share with you an offer at the end. So the trading framework. There are 3 very important things that you need to have in the framework to become a successful trader. Let me ask you a question, and you can type it in the chat area. Who here has a trading plan? Okay, who has a trading plan? You can type it in the chat area, but look and see what you guys are typing. So if you have a trading plan, type yes. And if you're watching the replay of this, you can send me an email. My email is simon@tradesmartforex.com at the bottom over here. Okay, we have a yes, that's good. Yes, yes, yes. No trading plan. Okay, so the first thing you need in your trading framework is a trading plan. Okay, if you don't have a trading plan, stop trading. Don't try and trade without a plan. If you fail to plan, then you plan to fail, as the saying goes. In that trading plan, you need to have money management rules. You need to have risk management rules and trading strategies. Remember, a trading strategy is not a trading plan. It's part of a trading plan. That's the first thing you need in your trading framework. So if you don't have this, you don't have a trading plan, you're not going to succeed. I can tell you as simple as that. Without a trading plan, you will never succeed. Okay, it's as simple as that. So if you're not finding any success yet with your trading and you don't have a trading plan, there's your answer. Go get yourself a trading plan. Go develop for yourself a trading plan. The next thing you need is a trading log, and that doesn't mean your broker's report of your executions and your transactions and what you did. No, that's not enough. You need a proper detailed trading log that gives you feedback on your trading, and I'm going to show you a little later on what that means. The next thing you need is a trading journal. You need to journal what you're doing and why you're doing it as you're trading, and what's going on not only in your actions, why you're doing what you're doing, what you learn from what you're doing, what's going on in your emotions as well. What's causing you to take those actions? That's a trading journal. It's different to a trading log, but it gives you a complete picture of you as a trader, especially if you're a discretionary trader. Those are the 3 things that you definitely need if you want to succeed. Now let's go over the process. You need to have routines in place. You need to go through some form of preparation before you trade. Don't just switch on your computer and trade. I know it's very tempting and it looks pretty easy to do. Don't do that. You won't succeed that way. So the first question you need to ask yourself is, am I ready to trade? And the next question you need to ask yourself is the market ready? So you have to have a way of assessing both of these. Am I ready to trade? Are you rushing out? Do you have the time? Do you have kids banging on your door? Are you ready to trade? Are you too tired? Are you not feeling well? So say you are ready to trade. Now what? Is the market ready? So you need to have a way of assessing that. You need to have a way of reading the market, a way of identifying opportunity of high probability scenarios in the market, high probability trading scenarios. If you don't have a way of doing that, then you shouldn't be trading. Again, a strategy is not enough. You need to understand how to read the market and how to apply that strategy under the right, correct circumstances. Timing is everything. And you need to understand how to manage risk. So these are two things that you need. You need to prepare yourself. Are you ready? And is the market ready? And only then do you start trading. You need to have patience. You need to wait. You know, you could rename trading as waiting. We spend most of our time waiting for the market to set up according to our trading plan that we've already tested and we know produces positive results. We have a tested trading plan that has a positive expectancy. So we know if we apply that trading plan over time, we will make money. So you need patience. You need to wait for the right scenario to set up in the market. And then you need to take it and do nothing in the meantime. And once you're in a trade, you need to leave it alone. You need to wait for it to get to its target or to get to its stop. Or if you need to manage the trade actively, you need to wait until you need to do the next step. So you need patience. You also need discipline. Now, by definition, discipline is the ability to follow a set of rules. If you do not have a set of rules, that's your trading plan, then you cannot be disciplined as a trader. It is impossible. Without a set of rules, what are you being disciplined to? Discipline is the ability to follow a set of rules. If you don't have the rules, you can't be disciplined. So without a trading plan, you don't have discipline. Without discipline, you will not succeed. Then you also have to make sure that you have your psychology and emotions intact. If you're following your trading plan and you find yourself deviating from your trading plan because you're afraid of failure, maybe you're afraid of success, you have a fear of success, a fear of making money, a fear of losing money, there's many different issues that you could have, then that could stop you following your trading plan and doing what you need to do. There's many traders out there that know what they need to do, but they can't get themselves to do what they know they need to do. That could be a psychological and emotional problem. That needs to be solved and resolved in order for you to succeed as a trader, especially if you're a discretionary trader. But a lot of these problems happen when you don't have a plan. Because if you don't have a plan and you don't know what you're doing, how on earth can you be strong psychologically? You don't know what you're doing. Imagine driving a car on the Autobahn in Germany. Your friend's driving a Ferrari, let's say, or any car, yeah? And it's going 150 miles an hour down the Autobahn. And he gives you the steering wheel and he says, drive. And you don't know how to drive. That'd be pretty nerve-wracking. That could cause a lot of emotional issues. But if you know how to drive, it's an exhilarating experience. It's different. So not knowing what you're doing and trying to make money trading without having the foundations of what you need to do, you're setting yourself up for failure. And you can cause all sorts of problems, bad habits, that once they're formed, they're very difficult to change. So as they say, start as you mean to go on. Start the right way, it's much easier. Some of my most successful traders went from nothing to success in 3 months. And they didn't know anything else. So they had nothing to compare to, no bad habits, they just did what they learned to do. And you have to have a way of measuring your progress. If you have no way of measuring how you're doing, how do you know whether you're moving forward or backwards? So you need to have some form of measurement of your progress, of your success, of your failures, what you need to work on. So let me give you a trading process example of what you need to do. And again, I don't believe many people cover this, but without doing this, I don't believe there's any other way to do it. This is really the only way to do it. So here's an example. Firstly, prepare yourself to trade. Then what you need to do is analyze the markets you trade with a view to finding trading opportunities. Next thing is wait for the market to show you a trading opportunity in your trading plan. That's the next step. That's the waiting part. Remember, we've got here trading plan because that's part of what you need to have in place, the framework. Then when the trade sets up in according to your trading plan, you take the trade. And take a picture of your trade entry. At least you know That's what the market looked like when you took the trade. Did you make a good decision? Remember, after the fact, everyone can make money. You need to make a decision when you can't see what's happening on the right-hand side of the chart. It hasn't played out yet. You can't make a decision afterward and say, oh, I'll buy here and it went up to there. That's when I do it. But that's not what you see when you're trading. So you need to make it exactly the same as the decision process when you're actually trading. Otherwise, you're training in the wrong way. So take a picture of the trade entry and get to learn what that looks like. Write an entry in your trading journal. Manage the trade according to your trading plan. And take a picture once you finish the trade. Take a picture of what happened next. Enter the trade in your trading log. Write an entry in your trading journal. So that's 11 steps of the process, and you can do something similar to this, and you should be doing something similar to this on a day-to-day basis when you're trading. So let me ask a question to the audience, and for those of you who are watching at home, the recording, how many of you do this? How many of you have a process that you go through? Remember, doing a process like this builds good habits. Okay, doing this repeatedly on a day-to-day basis builds habits, so it becomes automatic after some time, and you build good habits. Good habits in trading, the correct habits, set you up for success. Not doing something like this will set you up for failure. So how do you find your biggest trading demon? Remember, most people at the beginning, when they start to learn how to trade, don't realize that what they're really doing is learning about themselves. It's a journey of self-discovery. It's like holding a mirror up to yourself and discovering who you are. If you didn't know yourself before you started trading, get ready to find out. And there's many people that go through life and they don't know themselves. Trading is a great way to learn about yourself. It tests you in all areas that you never even knew. And it'll start to bring out latent things about yourself that you didn't know. So how do you find your biggest trading demon? I'll give you a story. I had one trader many years ago. This was about 10 years ago. And he said, I'm very disciplined. And I said, great. So let's be disciplined. You're disciplined. So I was going over his trades with him in his trading log. And I went through and I said, okay, this is your trade. What trade in your trading plan did you just take? Okay, that trade's not in your trading plan. Okay, trade 2. What trade is that? Okay, that trade is not in your trading plan, and so on. So I asked them, I said, are you disciplined? And they looked at me. The definition of discipline is the ability to follow a set of rules. Did you follow your set of rules? No. Are you disciplined? No. That's the answer to the question. Do you think you're disciplined? Yes. In reality, what are you? Not disciplined. You need to learn how to become disciplined. So how do you find your biggest trading demon? Well, basically, you have to use a trading log and log all your trades, every single one. Log each mistake you make. Log how much money that mistake costs you. And at the end of each month, what are you going to learn if you do that? You're going to learn your number one error. What is your biggest mistake and what is it costing you? Isn't that a good thing to do? I give a trading log to each of my traders that I work with one-on-one when I coach my traders. I give them a trading log. It's automatically built in. If they log everything correctly, they will know. If they log every mistake they make on a trade-by-trade basis, they will know at the end of the month what their biggest trading error is. Wouldn't that be a good thing to know? Most people go through the month and what they want to do is just ignore. They had a big losing trade. They did the wrong thing. They push it aside, suppress it, move on and deal with it, and then come back the next day and maybe the next week and do the same thing again. And they don't know what mistake they're making, but it's painful and they want to not dwell on it and just move on to the next trade. And this cycle repeats until they either blow out all the money that they have or they realize they need to actually start doing things correctly. The majority of people that try trading and they don't do it the right way and don't realize, how to figure out what they're doing right and wrong. Well, once you've blown out all your money, then it's back to what they were doing before, or they give up on trading and move on to something else. And they'll blame everyone else or everything else apart from themselves because they didn't keep track of what their problems were. Remember, as traders, we are independent. We have to be independent. All of my traders, I train them to be independent thinkers, independent traders. They don't need to rely on anyone, not me, not any guru out there, no signal service, just on themselves. You cannot be a successful trader if you're relying on someone else. That's not you. You need to make your own judgment no matter what anyone else is saying. So remember, in trading, there are only 4 outcomes of every trade you take. Either a big win, a big loss, a small win, or a small loss. Now, you will be okay if you manage to remove number 2. So now prepare to be shocked. The biggest trading demon that most people have is not cutting their losses at 1R. 1R means 1 unit of risk. If you're risking $100, then your R value is $100. If you're risking $1,000, it's $1,000. If you're risking $10, it's $10. Whatever you're risking on the trade, money-wise, that should be where you cut the trade. You should never lose more than that amount. So let me ask you a question. What would happen if you cut your losses at 1R? So let me show you. Here's a trader's results, 350 trades. Let the losers run. Here's their profit. They made profit. Their batting average, they got it right 56% of the time. And their average winner was slightly smaller than that average loser, but they're still slightly profitable. Look what happens from these same 350 trades when we cut the losses at 1R. Look at what happens to the profit, $806. Yep, the average loser goes down, so the average winner to average loser increases. The batting average is exactly the same. So let's have a look at the results here. If you let your losers run, your expectancy here is 32 cents. Yeah, but if you cut your losses, each trade was risking $25, then your expectancy goes up to $2.30. That's what you expect to make on every trade, winner or loser. The result is 7 times more profitable. Isn't that unbelievable? Just by doing one thing, cut your losses at 1R. So here's another example for comparison. Let the losers run. This trader is down $665.13. Batting average, it's like 50-50. Average winner to average loser is skewed a bit. The average loser is bigger than the average winner, as you can see. Let the losers run, losing month. Cut the losses at $25. That losing trader becomes now a winning trader. Batting average is the same because there's no more winning trades than losing trades. It's the same as it was before. And the average win-loss size ratio, that's the average winner to average loser, is now positive, is above 1. That means the average winner is bigger than the average loser. So what's happening with this trader? They're letting their losers run. And these are real results, by the way. So the question is this: how to survive the learning curve when you're trading? Well, I've just given you the answer to that question. I hate using the word secret, but if there was one secret to surviving the learning curve, this is it. Cut your losses at 1R. Keep your R value small. Most of my beginning traders, when they start out trading real money in the live market, will risk $10 per trade. That is it. Sometimes a bit more, but no more. We can risk $10 per trade. When I first started out, we couldn't take small size. We had to take standard lots. It wasn't possible to take small. It didn't exist. Now you can take small size. If you're trading the Forex market, you can take a micro lot. Every pip move of the euro dollar is 10 pennies. That's not going to harm anyone. If it goes 10 pips away or 20 pips away, you'll lose $2. That's very risky, isn't it? Well, they tell you that trading's risky. It's only as risky as whatever you risk dollar-wise on the trade. If you risk $10, that's how much risk you're putting on the trade. You decide. That's the key. If you don't have a stop value or you don't need to have a stop value, but if you have a stop amount dollar-wise and you stop your trade before you get to the maximum loss for 1R, then you should be okay. You should be able to survive the learning curve and figure out what you do right and wrong and fix it as you move forward. So here's an action plan. This is what every single one of you should do here. And maybe you should take a picture of this. Log all your trades in a trading log. Now you must be able to do that. It's not so difficult. The next thing you need to do is cut your losses to 1R. Cut your losing trades to 1R. Go through, and I'm going to assure you that a lot of your trades will be bigger than 1R losses. And if you don't have a risk amount per trade, then you're doing something dreadfully wrong. Okay, so go through your trades that you've done the whole of this year and compare the results. Look at your trading log before, and then go through it again and cut every losing trade that was bigger than 1R, whatever that amount is, to 1R, and go and see what the results are. Compare them. Are you now profitable? And this is what I want you to do. I want you to email me your findings. That's my email address, and let me know. Okay, if you do this, I may offer you something at no cost. So do it and find out. Take action. Okay, do something. Do it immediately. You're watching this now. If you're watching the recording, pause the recording. Go record all your trades. Go through, even download your trading log. Well, it's not really a trading log, but download all the trades that you did from your broker if you don't have a trading log. Put them into a spreadsheet and go through each of them one at a time and tap out, remove, or put down. Say you're risking $100 and you had $1,000 loss. Make that loss now to $100, not $1,000. And go and compare the results of cutting your losses to 1R against not doing that and see what happens to the bottom line. So here are the 3 steps to success. Number 1, keep your losses small. Number 2, eliminate trades that are not in your trading plan. And the third thing you need to do is let your winning trades get to their targets. I actually heard this morning in an audiobook I was listening to when I was walking my daughter to school. And it was very interesting. Imagine you're waiting for a bus at the bus stop. And your bus comes on. The right bus comes along. You get on the bus. You don't get off before it gets to your destination, do you? You stay on the bus until it gets there. Imagine if you were to get off, you go, maybe I'm not on the right bus here, and you get off in the next stop. That's not what you do. So why do we do that with our trades? Get on the trade and let it play out according to your trading plan. Let the odds play out. If it doesn't work, then go and figure out why it didn't work. It could just be, if you have a trading plan or a strategy that produces only 50% winners, then half of your trades won't be winning trades, and that's fine. So long as your average winner is bigger than your average loser, you will make money. So now that you understand how you can improve your trading results, why don't you take it a step further and join our weekly preparation session? Now, let me share with you what people are saying. And again, this is educational. I'm not just selling you something. What you're going to learn in here is educational as well. So what people are saying, Simon then goes through all the markets he follows, sets supply and demand zones, and gives you his opinion on the market direction. It is well worth the money if you want to follow the markets and get good trades. It is worth more than the trading rooms where you just follow trades blindly, and this has helped me a lot. Jane, who happens to be in here at the moment. Hi, Jane. I really learned a lot from listening to what both you and Mike had to say. The whole atmosphere of the sessions is so friendly. Both you and Mike go through all the charts very clearly and point out any possible current or upcoming trades for both the whole week and day trades, some of which I took and they were successful. Most important though is you thoroughly explain how to use the different levels of supply and demand and point them out very clearly. I can highly recommend the trading room to anyone who is really interested and wants to succeed in trading. So here's the educational part again. What do most traders do? They spend 100% of their time trading. They don't do any preparation and they don't do any follow-up and review. And what does that result in? And just say yes if this is you. Just type a yes in the chat area or send me an email and tell me you're doing this. If you want my help, let me know. What does this result in? It results in fear. Who trades with fear? Who puts a trade on and their knees are shaking or they're sweating, their heart's pounding? That can't be sustained for a long period of time. That's a roller coaster ride. That's not trading professionally because you're not prepared. Ever turned up to an exam, maybe when you were younger, and you weren't prepared, and you hear everyone, standing out of the exam hall talking about it, and you don't understand what they're talking about because you're not prepared, and you start getting nervous. You walk into that exam and you flunk it. You have fear, you black out, you don't, you blank. As opposed to going prepared, and who cares what anyone else is saying? I know the information, I know my subject well, I'm going to pass this exam. I'm prepared, no fear. So if you don't do preparation, you're going to be afraid. There's going to be fear because you're not prepared. You're going to have what we call as traders hopium, hoping the trade's going to pull around, hoping that trade that is now down big will come back, and I'll put more on just in case, and I'll end up with a bigger loss most of the time. Remember, successful traders add to winning trades, not to losing trades. If the trade's a loss, why would you add more money to it? Most of the time, if you think about this carefully, what you should be doing is switching your position to the opposite direction, and then you'd probably make everything back and more as opposed to digging a bigger hole. If you got the direction wrong, then switch it. Take a trade in the opposite direction. But again, you need to know how to do this and when to do this. So hopium, we don't want to be in hope mode. We call that hopium. And also leads to frustration. You get frustrated because you're not getting the results you want, and you go round and round and round, hoping that tomorrow you're going to make back the money you lost yesterday, and the next day you'll make back the money and you're hoping for one big trade that will make it all back, and guess what? That never happens. And maybe you get lucky and you make a big trade, but then you give it all back to the market again. And the cycle repeats because you're not prepared. You don't do any preparation. You don't review your trades, and you can't review your trades unless you go through the process that we talked about earlier, unless you have a framework, unless you have a trading plan, trading log, and trading journal. There's no way of reviewing anything that you're doing. And ultimately that ends in failure. So what do professional traders do? They do this. They spend around a third of their time actually trading, a third of their time preparing to trade. And that includes waiting for the trade to set up. You prepared, you ready for it, you're waiting for it. And a third of the time going through their trades and reviewing what they've done. Did it work? Didn't it work? Why didn't it work? If it did work, can I do it better next time? What did I do right? What did I do wrong? How do I improve? And what does that result in? That results in confidence. You're moving forward. You're starting to learn. Guess what? The market teaches you. You teach yourself. Once you've got the process and the framework in place and you put it into practice, then you're going to build confidence because you'll start to learn from your failures. Remember, failure is just a pathway to success. I was having that conversation with my daughter today on the way to school. And I was trying to explain to her that I don't mind if you fail a test or anything, that's fine. So just learn what you did wrong and do it right the next time, or learn from it. And guess what? You're in a better position then than someone who never failed. Why is that? If you didn't fail, you just learned the right way to do it. If you failed, you learned the right way to do it, and you learned the wrong way how not to do it. You see that? You've learned two things. So remember, a winning trader can suddenly fail as well. It can go the other way. A lot of traders that I started out with when I started my career as a trader, that started out successful, or they were profitable at the beginning, are no longer trading because they blew out at some point later down the line. And one of those traders actually, unfortunately, after trading well for a while, blew up $1 million on one trade, and that was Lehman Brothers. Because guess what? There was a flaw in the way he was managing his trades. He lost $1 million when Lehman Brothers never came back because he was adding to a losing trade. And many times the market turned around, but this time it went to zero, as you know. So if you do it right, that results in confidence, consistency, that's what you need, and high probability of success. Not doing this, you have no chance. So preparation equals confidence. So here's what you're going to get with this training. We want to lighten the load to help you with it. This is going to save you time. It used to take me around 4 hours on a Sunday to do this analysis when I first started, and now we've got it down to around an hour. And what I do every Sunday is I'm preparing to trade, and I broadcast live and record it, and I call that the weekly preparation session. If you were to try this alone, it may take you even longer, and you might not even do it correctly. So what you can do is compare your analysis to mine and see how it works in real time as the market unfolds during the trading week. So this is what you're going to get. You're going to get access to the membership site, the weekly prep session recording, and that's every Sunday. And you're going to be learning by watching us analyze and prepare for the trading week. So you'll be able to learn how to do that yourself. These are the markets we cover. We cover the Forex market, the futures, we cover oil, gold, Bitcoin, the S&P 500. We cover the other markets like NASDAQ as well. And we cover natural gas, and any market that you want us to cover, we could potentially look at, any stocks as well. The timeframes we look at are all timeframes, believe it or not, because I trade in long term, as in I have long-term trades on, for example, gold, for example, buying the market at the bottom last year in March and holding. We have swing trades that may last a few days. And then we have short-term day trades that will last when we're flat at the end of the day. So again, we point out what is setting up on different timeframes. And you also get my supply and demand levels ahead of time, and you can actually use them yourself, put them on your charts and go and see what happens when price goes to those levels. You also get actionable trading ideas and the current and last week's recording. And also we launched this year our 24/7 Discord server, which is our trading community, and you get access to that as well. And you can also access it as a member of the weekly preparation session, our live trading room in our Discord server whenever we go live. Sometimes some of our traders will broadcast when they're trading, and you can follow along with what they're doing, some of the more experienced traders. So this is what it looks like. This is our Discord server, and you can see people asking questions. We have best trade, worst trade. It's changed slightly since. This is the last picture I took of it. And I can show you there's educational material in there. I'll pull over what it is right now. See if I can do that. So you can see this here. You can see this is basically the live room, and we've got this premium channel over here. So you can see, and we have some of our traders that even post. One of the most successful traders, Jane, who posts her trades. She trades the NASDAQ futures at the open, and she'll post, and there's a lot of educational material here, and also trades. Live trades are being called out and ahead of time before they set up, and you can take them if you want yourself. So this is our Discord server. So what I want to ask you to do is to join now, and there's a very special price. Usually to join is $97 a month or $997 a year. Deadline is Monday, April the 26th. And we don't do this offer very often. We've done it one other time this year so far, and that may be it for the whole year. But you will receive $50 off or $500 off the year, and basically you only pay $47 a month or $497 if you want to lock in for the year. We have some people that see $497 to get. You will probably make that back if you follow our trading ideas in a very short amount of time, depending on what size account you are making. You'll probably make the subscription back pretty quickly. But the idea is not to think of it like that. It's to think about the education, what you're going to learn. If you did it for a whole year, or if you just came for a month, 4 weeks of it, to try it out and see maybe this is something that you can learn from and take your trading to the next level. So what I wanted to do is you to go to this link, and I think Sherry will pop it into the chat area. And the link is tradesmartforex.com, the number 4/traders exclusive. That will take you to the page. And again, this is what the offer is. Now, let me show you the membership area. So basically, when you can email me to this email address over here, but basically when you join, you'll get an email address which will give you immediate access to the membership area and also a link to join the Discord, and I'll show you what that looks like. So when you click on now, click on the link, and it will bring you to this weekly preparation session. So you can go through over here, and the two options are here. Click on one of them. Most people will do this. Click on join now. It will bring you to the weekly preparation session here. Now type in the coupon code, I think it's called, type in the coupon code offer, and then click this. And you will see it will take it down to $47. That's your risk, $47. That's nothing to come and join us and get some very high quality, professional market analysis and learn how to do this for yourself and see the process. You'll learn the process we go through to prepare for the week. And then when you will also see, I mean, that's vital. Again, the preparation ahead of time, as we talked about. Then you get access to the membership area, and the trading room, the weekly preparation session is in here. So you'll get access to this. And then you come into the weekly preparation session. This is what you get access to. This is the latest one from Sunday. So you can click on there, and you also have the previous week. You can go back over the previous week if you want at the beginning of the week and go and see, did we get it right? Go and prove it for yourself. I already had a trader who was a PhD or postdoctoral fellow at Princeton University go through, and he went through actually the weekly preparation session that I used to put out free on YouTube. You can go and watch it if you want, and go back and have a look at the analysis there just on the dollar. And he went through and proved just over, I think it was about 7 or 8 months of data he went through, and the accuracy was about 85%. So that's pretty good. You're not going to get 100%. So that's what you get access to. And okay, so again, quick recap. Go to this link, tradesmartforex.com/traders exclusive. Deadline is Monday, April the 26th, and you'll get $50 off or $500 off for the year. Use the coupon code offer at checkout, and you'll pay just $47 a month or $497 a year. And again, you can cancel at any time. So wouldn't it be a good idea to try it out and see if it's for you? $47. That's it. So what I'm going to do now is open up to questions. We've got about 5 minutes for questions. That's good. And again, if anyone has any questions here, you can email me to simon@tradesmartforex.com. And again, this is a link to join, and remember to put in the coupon code offer at checkout. Once that date's gone by, the coupon code won't be active anymore. So take the opportunity to get it now. Okay, so I'm opening up to questions. Let's have a look. If you guys type it. Okay. Hi, Simon. Hi, Simon. This is nice. Thank you. You're the best. You're very welcome, Kerry. What is the cost for the live trading room, Larry Fox? So, okay. So what you can do, if you want to join the live trading room, and the weekly preparation session is part of it, you go to my website over here, and education and trainings here. Click on live trading room. And you can go down, you can actually start a trial for $127, whichever one you start, and you can cancel any time. So trials for two weeks. The reason why there's a cost for it is because if there isn't a cost, you don't take it seriously. It's more for you than for me. I've taken, done, many kind of courses that were free, so to say, but I didn't do them. So if you want, once you've got a bit of, you paid something for it, then you're more likely to actually turn up and take advantage of it. So that's the thing. And funny enough, the more money you pay for it, the more you're going to take it seriously. So, and again, we have people who pay $497 a month that don't even come to the live trading room live. They actually watch the live trading room, and they trade later on in the day. We had one such person who last year just started trading, and for the first time, seriously, and he traded from March last year till the end of the year, and he made around $85,000 just based on what we cover in the live trading room. So again, these are the costs. These are different subscriptions you can have. You can join it for a whole year if you want. We have people that join it for a year, and they've been with us for a few years. It's a nice community as well. We have some very experienced traders as well that you can learn from. and everyone supports everyone else. It's a very wonderful, warm community. So you'll feel like you're part of something special as well. Okay, so those are basically the costs. And again, the weekly preparation session is part of the subscription as well, and you get to come watch it live as well. Okay, any other questions? We've got about 3 minutes left. Okay, Stephanie. Okay, so very important to do what I asked you to do before. Anyone who goes through their trading log or just puts it in a spreadsheet and then cuts off at a certain dollar amount and then sends me that, then do that, and then maybe a special treat for you. Okay, and this is what I'm going to say. So with that, what I'm going to do is get back to this. I want to thank everyone for attending this. I want to thank Sherry and the whole team at Traders Exclusive for putting this on and inviting me. I want to thank you for your time, for watching it. I have a YouTube channel that you can subscribe to here. A lot of free information there. You can watch other free presentations. And again, there's a link to the offer. Put in the coupon code OFFER at checkout to get the special offer for anyone here today. So for those of you who have signed up already, I look forward to seeing you in the session. If you have any questions, email me. And again, Sherry and the team, thank you very much.
Thank you. This was awesome. I appreciate it. Everybody, there is a link in the chat, and don't forget your coupon code. Thank you so much, Simon. That was fantastic. And I appreciate you being with us. Hope you have a wonderful day, rest of your day.
Thanks, Sherry, and thanks everyone else for watching.
Bye now. All right. So I just want to remind everybody that if you have to leave early, we do have, you will get a replay email from GoToWebinar, but then we also do post it at https://tradersexclusive.com/archived_webinars. You can find it at tradersexclusive.com, and you just have to go to the, see where the green arrow is on my screen there, and you go to the trading education webinars, and then from there, you'll see our upcoming webinar dates. And there is another green arrow there that shows you to click here if you want to go to the archived webinars. And that is what we have there. You just scroll down to the one you want, and you'll be able to get this replay. So now I want to bring on Mark Sachs of Bright Line Trading. He's going to tell us about how to exploit the key force tracked by Wall Street insiders. Wow. So let me just introduce Mark. He's been with us before. We really like to have him back. Mark is a 20-year trading veteran and professional financial analyst. And maybe you've seen his work inside some of the industry's most respected trading publications. He's got over 15 peer-reviewed articles in top-tier journals. He's an Ivy League trained professional who graduated with a degree in applied mathematics. He was elected to the prestigious Phi Beta Kappa Honor Society. He's also a former full-time professor at Jefferson University in Philadelphia, Pennsylvania. One of his students has said, his training has allowed me to cast aside 99% of the useless indicators and trading systems that lead to failure in 95 to 98% of day and swing traders. His system is totally unique and based on mathematical modeling, and the software tracks the directional flow of Wall Street money. So I want to thank Mark. I think you've unmuted yourself. Let me turn you into a presenter. And I'm also going to give you organizer so that you can see the questions in case you want to take them on the fly or ask questions as you go. Maybe.
Listen, I really appreciate the introduction. That was very kind. And what I'll do is I'll answer all the questions at the end.
At the end. Okay, everybody. Now, like I said before, take notes with a little bit of context so that Mark will know what you're talking about. I mean, obviously, Mark, you'll probably know what they're talking about, but still, with a little bit of context with the question, it helps to be able to remember, oh yeah, that's where we were. So take it away. And thanks
Okay,
for
well,
being here.
thank you so much. And again, really thank you for the really kind introduction. And what we're going to be discussing today is our Compass trading system. And I have a lot of material to show you. So we're going to move pretty rapidly through this. I don't think that you're going to have any problems though following along. Now, just a quick disclaimer that all signals and trading opportunities that we provide are for educational demonstration purposes only. That the company doesn't take responsibility for any profits or losses that traders may incur. Most important thing is that every trader understand that trading is risky and that you can lose a substantial amount of money. And that what I always tell my traders is never trade what you cannot afford to lose. Now, there are a lot of people right now on social media. When I started the company 10 years ago, they just weren't there. And they're on YouTube, Instagram, Facebook, and man, they just plow you with very, very sophisticated marketing. But most of these people are marketers. They are not traders. I am a trader and really not a marketer. Now, the introduction pretty much included a snapshot of my resume. But I went to University of Pennsylvania for 8 years. I majored in mathematics, and within that area, I focused in on mathematical modeling. Now, mathematical modeling is the methodology that we use to describe the movement of any closed system. And each financial market is a closed system. And what we do is we define what variables or forces come to bear on price in that closed system. And once we define them in a multivariate equation, we can then determine with great accuracy how price is going to move off the right edge of the chart. Now, I'm going to show you a trading methodology and a software system that is totally unique than anything that you have ever seen. Now, I was a full-time professor at Thomas Jefferson in Philadelphia. I published 15 peer-reviewed articles. I've mentored more than 30,000 traders. I've spoken internationally in many countries, and domestically, the last place I went was Dallas, Fort Worth, which was just right before the COVID epidemic. Now, if you're here today, the chances are that you have some problem with trading. And the most common problem when traders talk to me is that of consistency. They get winners, but what they wind up doing is pulling in too many losers, and so they can't trade profitably day in and day out. Out of every 10 trading sessions, they can't make money 8 to 9 out of every 10. And that's really where you want to be, and that's my goal, to get you to that point. Now, you may have blown one to several trading accounts in the past. You may have purchased expensive software in the past that, despite promises, does not work. But what I'm going to show you works, and I trade it with you elbow to elbow virtually every single morning. Up till about 9 minutes before this webinar began, I just closed up the trading room. We did terrific today. And what I did after the trading room was done was I spent about 2 hours answering questions about the entries, about the system, about the indicators. So it's not only an environment where I call the trades in advance, all the stops, targets are all projected, the P&L on every trade is projected. I also do a tremendous amount of teaching. And I believe that educational support is the linchpin of you becoming a really, really successful, profitable trader. Now, when I first left Jefferson, and I'm going to tell you later on in this webinar why I had to leave, I looked at the software that was out there, and I saw that none of it would work. And I'm going to go through a lot of the things very quickly that's out there now. And what's out there now has really been taking traders into bankruptcy, at a 95 to 98% rate. I mean, almost 98% of all day and swing traders go broke. And if you look at the evolution of this process over the last 100 years, we have gone nowhere. If you look at medicine and you look at electronics, you look at architecture, look where they've come in 100 years. I mean, 100 years ago, I'm not sure if we had a telephone. I mean, we may have been communicating via telegraph. I'm really not sure. I know we didn't have smartphones. I mean, that's how far we've come with microprocessors and chips. In medicine, the therapies have evolved into complex immunotherapies from basically a medical environment where I think, I'm not even sure you had penicillin yet. I don't know the year that it was invented or the year that it was discovered, actually. So all these scientific disciplines have made tremendous strides. And day trading and swing trading is not an art, it's a science. And it's got to be based on mathematics. And it's gone nowhere. We are still trading the same stuff that we traded 100 years ago, and that has cost an innumerable number of traders their account. And I have 500 traders in my live trading room. That's why it takes me so long to answer questions. And we make money almost every day. Not every day, for sure, because if we did that, we'd be perfect. But I would say 8 to 9 out of every 10 trading sessions, we rake it in. And a lot of traders in my trading room are better traders than me. And you won't hear many people say that. But even though I've been sitting in front of this computer for 10 years trading, I've got people in that room that are more talented than me, and they just make an enormous amount of money. But the key is that they're all profitable. Now, I have people's in all stages in the room. Some are brand new. They ask, quote, brand new questions. Everybody has to start somewhere. No question is too basic for me to answer. Now, if you stay to the end of the presentation, and hopefully you will, you're going to get a tremendous amount of bonus software, a huge special discount, and a really nice special secret bonus. It's secret because I haven't told you what it is yet, but I spent a lot of work on it. It's going to help you trade. Now, I want to do a quick recap because I want to make this an academic presentation. Just don't want to throw my software and trade methodology at you. I want to sort of look at what we trade now and what it's all based on. So if we go back 400 years, let's look at what the Japanese rice traders did when they created Japanese candlestick patterns. Now, essentially what they were looking at was a transaction in which there was 100 kilos of rice. And on one side, maybe there were 100 buyers. On the other side, there were 100 sellers. And they would barter back and forth to determine the direction and price that the rice was going to change hands at. That's exactly the same as the markets, whether you're trading Forex, futures, stocks, or even cryptos. We're bartering at every price. They're buyers and sellers. We're going to determine at what price those contracts lots, or shares are going to go, and the direction of price. Now, here's the problem. 400 years ago, they were looking at a market in which in the aggregate, if you had 100 buyers and 100 sellers, you had 200 people in the transaction, and they all had equal power. No single buyer or seller had the ability to dominate the market. It was just simply an environment where there was a small universe of retail traders sitting in front of that rice, bartering back and forth. And from that, they developed a very elegant system to determine who was in control of that transaction at any given moment, the bulls or the bears. And we all know that Japanese candlestick patterns really are very elegant. And if you read Steve Nissen's books, you can really learn about them in detail. But I would proffer to you that don't waste your time, because we're trading in a different market environment. And if you trade off the right edge of your chart, and you're looking for something that has predictive value, trading pure price action and Japanese candlestick patterns are never going to make you money. They've been around for 100 years, and I don't know one pure price action trader that makes a dime. And here's the reason. The market has changed. There's now tens of thousands to 100,000 or hundreds of thousands of small retail traders, but now we have that institutional force. Now, who are these institutions? They could be a big bank, Goldman Sachs, Bank of America, Deutsche Bank, HSBC. They could be located in any place in the world. You have 401k plans, you have mutual funds, you have hedge funds, then you have Wall Street money like JP Morgan, Goldman Sachs. There are many, many institutions that have the power to hit a button on their computer, generate a high frequency algorithmic trade, and price is going to go in the direction that these institutions set. Our sentiment as small retail traders is absolutely irrelevant. If we don't ride their coattails in the direction that they set, we're going to get stopped out. And you're going to see how institutions thrive on catching us, small retail traders, in the counter trend direction, that running us over and stopping us out is an essential component of their trade. And they don't do it to be mean. It's simply a matter of money. And I'm going to show you just how that works. Now, when institutional money is not present, and you and I are just present, the small retail traders, we tend to create disorder, chaos, and we define it as chop. Now, sometimes it's not so easy to see chop. So you need a software program that definitively and objectively defines chop. And then when the big institutions come in, it's going to tell you that they're at work, and we're going to ride them in the direction that they're going to set for price. So this is a time frame independent, and it's a market independent force. It doesn't matter whether you're trading futures, forex, stocks, or cryptos, and it doesn't matter the time frame, minutes, hours, days, or weeks. As long as the institutions are at work, price will move in the direction they set. Now, I always ask traders in my room, what is the number one goal we have as day traders and swing traders? And everyone always says it's to get winners. And that answer is wrong. The number one goal that we have is to avoid taking losers. If we can sidestep almost every loser in an environment that we define as chop, it doesn't take very many winners in a week for you to accrue enormous success trading. So that's our number one goal. Sidestep every potential trap, every false breakout, and only trade what institutional money is really pushing these markets. Now, I want to talk briefly about pattern trading. And I listen to other people's webinars all the time, and they all say, hey, I'm the number one pattern trader in the world. Hey, I'm the number one pattern trader in the world. Well, you know what? They can be the number one pattern trader in the world because patterns don't work. Because patterns, rising triangles, falling triangles, J-hook patterns, channels are all created by the sentiment of small retail traders. Institutional money does not create a falling triangle pattern. So we see these sequential lower highs equal lows and the anticipation of a bearish trend continuation. It's all based on the sentiment of us, the small retail trader. And we're going to get some winners, but we're going to pull in 1 ton of losers if we trade any kind of pattern. And you always see these quote gurus rolling out these secret patterns, the H pattern, the this pattern, the that pattern. Well, pattern trading doesn't work. And it doesn't, again, it doesn't work because it's simply a slightly more elegant way of displaying Japanese candlestick formations. Now, here's the thing, and here's the problem. Now, in a descending triangle, and I should have let price break and all these traders run to the short side. So you have a ton of retail traders piling short on a break of support in this descending triangle. So the institutions are saying to themselves, I think that this financial instrument is underpriced and I want to take it long. So when are they most likely to take it long? Well, they're most likely to take it long when we're all piled short. And here's the reason why. As they sweep price to the upside by stopping us out, they do two things for themselves that are really critical. One, the price evolves to the upside with greater authority. It has really a strong move to the upside because we provide it with a lot more momentum, because we have to buy back our shares, buy back our lots, buy back our contracts, and we push that financial instrument up. In addition, we provide them with liquidity. As they move this trade up, liquidity may become an issue, especially if they really go high and they move it up into rarefied air. They need us. So by stopping us out and taking a trade when we're all caught in the counter trend direction, we actually grease the treads of their move. And I'm telling you, this is something we are never going to do again. So really quickly about Fibonacci, 13th century mathematician. He created Fibonacci transformations from those kind of Fibonacci numbers. Fibonacci numbers have a lot of validity and a lot of symmetry in nature, but Fibonacci retracements and extensions in no way describe market sentiment. I mean, that's magical thinking because it's not based on any mathematical formula. To think that this retracement level is where buyers are going to all sit, sellers are going to sit. So when it comes up here, it's going to act as an area of resistance is absurd. If you trade it off the right edge of the chart, it's going to take you right off the cliff, along with 100 years worth of traders who've tried to trade it before you. Now, institutional traders can give a hoot about Fibonacci levels. Now, we looked at price action, we looked at price patterns, we looked at Fibonacci. Elliott and Gann were really brilliant mathematicians. They looked to create formulas that describe market sentiment, but it's market sentiment in an environment where only small retail traders existed. Institutional traders don't care about Elliott or Gann either, or the formulas they created. And they're just gonna run right through it. And if you try to trade them, you're really gonna get taken to the woodshed. Now, the last thing that we're going to talk about is divergence signals. Now, that's top calling and bottom calling. And we're never going to do that again. And then let me tell you why. A top and a bottom are defined and created by big institutional money. This markets, can be overbought or oversold for minutes, hours, days, weeks, or months, as long as the big institutions continually push price to the upside or the downside. Divergence signals are going to blow you away and destroy your account. Now, here's what the big institutions love to do. They'll take a financial instrument long, and then they'll step aside after it's made a really nice move up. What do we do as small retail traders? Well, we take it short because we want to take the move back to mean price. Now, we define mean price as the 50-period EMA. And there's a mathematical reason we use the 50 that I'm not going to go into here, but I will in the master class, and you get a 12-part digital learning series that's going to explain everything to you in a lot more depth. But we hop on that trade short. Well, when enough of us have hopped on it short, the institutions roll right back in and take it even higher. And what have they created? They've created a bear trap. They're constantly creating bear traps at the top and bull traps at the bottom. Why do they do it? Again, we propel the trade up with greater momentum, and we provide it with the liquidity they need so they take the trade and it moves smoothly without accruing slippage as each price level is breached. So we're never top calling and bottom calling again. When big money is in the game, we're with them. When big money is not in the game, we stand aside. Let the other small retail traders kill each other, trade their money back and forth. We are not going to accrue the losers that they're going to accrue. We're going to trade the coattails of big institutional money. If it's not there, we stand aside. And just a quick recap, institutional money comprises 70% of the volume of every market. That's small cap, mid cap, and large cap stock, Forex, futures, not so much in cryptos. For Bitcoin, Ethereum, and Litecoin, yes, but in these small coins like Dogecoin and these non-fungibles, I mean, they're in the micro cap arena, and they can be moved by small retail traders. But if you want to become a professional trader, you're not going to make money trading you're not going to make consistent money trading Dogecoin and micro cap stocks. You're going to trade small cap, mid cap, large cap, Forex, or futures, and you will consistently gain winners because you're going to be trading in the direction that institutional money is going to set with this big hand. Now, our software also defines sector rotation. You know, big institutional money, if let's say risk is on, and today risk is on. How do we know? Big institutions are buying stocks across the board. The E-mini is up, the Russell's up, the Nasdaq's up, and the Dow is up. Risk is on, they're buying stocks across the board. Yesterday, risk was off. They were selling stocks hard across the board. Where do they put their money when risk is off? They put it into safer sectors, into treasury bonds, treasury notes, precious metals, certain currencies, Bitcoin. These have become safe havens because the big institutions have the same goal that we have, and that is capital preservation. Their number one goal is to make sure that they don't lose their money, to preserve the capital that they have in their accounts when they start. That's their mandate. First and foremost, we never want to give away any money that we use to fund our account. Our second goal, so when there's a lot of risk on the table, they move their money into safer investment vehicles. So we track the sector rotation. Now, big institutions are under a lot of pressure to keep their money at work. They can't just drop it to cash because the Fed rate is zero. They're going to gain no interest on it. And the pressure comes from the people who invested in the fund. I mean, you know, they have multi-million-dollar investors, and those multi-million-dollar investors are going to want a return on their investment. And if they don't appreciably outperform the S&P 500, they're going to lose $1 billion in investment in investing capital. So they have got to rotate their money from sector to sector based on what they see, with the understanding that capital preservation is their first goal, and their second goal is to make money for their investors. Our goal is to make money for ourselves. Now, here's the whole software platform in its entirety, and we're going to put it together. Now, market structure is important to taking a trade, as price action is unimportant and, in fact, is deleterious. Now, we define market structure with the EMA, with the 15 EMA, the 50 EMA, and the pivots. Now, when you have the 50 heading up like this, the 15 EMA crosses the 50 and heading up like this, we can only trade long. This is market structure, and the way we define it, we cannot take account this. If we try to trade it short in this environment, the likelihood of getting a loser is exceedingly high, and we can only trade long. In here, based on market structure, we can only trade short. 15s cross the 50 to the downside, 50 and 15 are red. We can only go to the short side. It is imperative we respect market structure. Now, we also have 3 major swing pivots. We could create more swing pivots or fewer swing pivots. If we have more pivots, we trade with greater specificity. It's tougher to get a trade. If we trade with fewer, we trade with more sensitivity. It's easier to get a trade, but it's also easier to walk into a loser. Now, these pivots are major swing pivots for the day, and they're defined by the fact that prices turned here multiple times previously. So what we do is when price comes up to a pivot, we never trade into it. When price goes down to support on a pivot, we never trade into it, up and down. What's really important to know on a pivot, you're not going to see this on your chart, you have to keep it in your head, that a pivot is not just a line, it's an area. And we can never know exactly when the pivot starts to influence price. So you got to give it some room. And as you start to approach a pivot, stand aside on the trade. Don't trade near support or resistance. And I just gave you one more slide to show you that the pivots are really areas and not just discrete lines. That's extremely important. Now, here's really one of the keys that make this software so powerful and give it such predictive value at the right edge of the chart. We all know that indicator analysis provides us with a lagging analysis. If we use data off our trading chart, we'll never have future predictive value as to the direction that price is going to go. So what we did is we use what's called the triple screen method of data analysis. Now, I'd like to say I invented it and take credit for it, but I never take credit for anything I didn't create. I read about this in 1997 in a book by Alexander Elder. You can get it on Amazon. It's in its 45th printing. It's rare that a book on trading stays fresh 27 years after it's been written. But what Alexander Elder knew was that if you're trading a 2-minute, no data accrued on the 2-minute will give you any future predictive value. So no chart is going to. So what he did was he created the triple screen. If you're trading a 2-minute, you can trade any time frame you like. These are just examples. If you're trading a 2-minute, we multiply it by 3 and get the 6. Multiply 3 and get the 18-minute. That's where all our data is obtained for indicator analysis off the 6 and the 18-minute. We ignore the 2-minute. And if we include the 2-minute in the data that create the indicator analysis, it's going to screw it up. If you're trading a 377 tick, we take the 2 higher fib numbers. If you're not trading a fib number, it'll default to the closest fib number and then take the 2 higher. Same with the range and Renko. 5 gives you 8 and 13. Say if you're trading a 7, it'll default to 8. Then you'll get 13 and 21. This algorithm is inside the software. If you're trading Unirenko, it's also inside the software. I like to trade Unirenko on futures and time on stocks and Forex. So we have 3 key metrics that determine money flow. How do we come up with these key metrics? Mathematical modeling. One is an assessment of volatility, 1 trend, and 1 momentum. Now let's take a look at the first one. Now this is Laguerre momentum. Now momentum can be assessed in many, many different ways. Obviously every oscillator assesses momentum. Relative strength, the Arun, Williams K, fast stochastic, slow stochastic, and a whole bunch of others that I just can't remember. But their number 1 goal is to track divergence. And we don't give a hoot about divergence. Now, the Laguerre is not made to track divergence. It is made simply to track the direction of momentum. Now, this Laguerre line is created by looking. This is the 5-minute. It's looking at the 15 and the 45. It is not looking at anything coming off the 5-minute. Now, this gives it tremendous future predictive value. Now, what is momentum in the markets? And a lot of traders have that confused. If you throw a cannonball off the Empire State Building, as the cannonball accelerates in price, momentum increases. But in the markets, momentum has nothing to do with speed. Momentum has to do with the sequential increase in buying pressure or selling pressure. So as the close of the candle approaches the high, sequentially approaching the high, that close squeezes tighter and tighter to the high. This line's going to rise, and you know you're in an environment that institutional money is pressing to the upside with greater and greater force. When this gear locks at the 100 line, you're golden for a long trade. And it's doing it based on the other two multiple charts. Now I'll show you its future predictive value. Here's the gear goes from oversold to overbought and prices in consolidation. It doesn't move. Now, if this gear was assessing momentum on the trading chart, it wouldn't move either. But because it's looking at the other two time frames, they're telling you that your trading chart is going to explode out of consolidation to the upside. And that's exactly what it does. That's its future predictive value. Same thing here on GameStop. Think it's hard to trade? Well, it's just not. Oversold to overbought. In consolidation, it explodes to the upside. Now, you're not even going to have to look for this because we have a scanner that some of you are going to get that's going to give you these entries. We're going to hand them to you. Now, you have to also trade in the triple screen alignment and trend of the instrument that you're trading. And I don't want to run out of time. If you're trading Google, you have to have a triple screen alignment of Google to the upside. If you want to trade the euro pound short, you got to have the euro pound on a triple screen alignment to the downside. So what we do is, here's market structure, only long. Confirmed, here's our triple screen assessment of market structure on the two higher multiple charts. Here's chop. They don't align and we don't trade. And we know how important it is to be able to stand down in a choppy market. Here you can only trade long, and giving you a definite directional bias will cut down on your losers tremendously. Now, I'm not giving you a trading entry. I'm just giving you an absolute direction that you must trade, or the likelihood of getting a loser is exceedingly high, because this alignment can only be created by big institutional money. What we create as small retail traders is chaos and chop and a yellow assessment. Here's another assessment, green, only long. Finally, we break down into chop. This is a short market structural setup. We want this same market structural setup on our two higher multiple charts. Here it is. Here's long, chopped, and now we're aligned to the downside. We can only trade short. And you see how advantageous it is. Here, we step aside. Same thing here. You're not going to get the top of the move. Who cares? What you're going to get is the meat of the move. That 80% of the middle of the move, that's going to make you all your money. You may not get the top and you may not get the bottom, but you know, remember that old commercial where that lady said, "Where's the beef?" Well, that's the beef, and that's the 80% of the move down. Now, the C2 indicator is a combined assessment of momentum and chop, and it's really powerful. We call it C2 because it consists of two forces. Excuse me. Now, it gives you, again, an absolute direction to trade, and it's using the triple screen assessment to do its work. Now, here's momentum on the triple screen. Here's the %K line heading up. I'm sorry, on the two higher multiple charts. I'm not giving you a number because this chart could be any number, and this could be any multiple. It could be any financial instrument, but that %K going long like this sets the direction. Prices accelerating to the upside on the two higher multiple charts. You only have a long trade. I did this in Unorenko candles, so you don't. So your mind does not even look at this in Japanese candlestick patterns. We created a chop indicator. Each candle has a chop value, and we want chop to fall. As chop is falling on the two higher multiples, and momentum is rising on the two higher multiples, the direction is set by momentum, and the fact that CHOP is objectively falling, not based on what we think we see, but on an objective mathematical assessment, we have a tremendous likelihood of getting a winner. Now, here's the indicator. The thicker it is, the stronger the momentum, and the less CHOP there is. When it's green, only long. When it rolls, you're always going to get an arrow, which is not necessarily an entry. Short and then long. Short. Short. That's a great entry. And here in CHOP, you can go short, long, short, but it sets up a direction for you, and you can never violate this. Now we have the VWAP. It's the volume weighted average price. It's a strong area of support and resistance. You tend to have a lot better likelihood of getting a winner when you trade long above the VWAP and trade short below the VWAP. And we never trade into the VWAP. Here's your short trade. Here's another short, looks like the same trade. Now, here's our scanner. And I want to get through everything, and I only have 7 more minutes. So here's the scanner, and the scanner is going to give you the entries. Now, I took out all the indicators, but you're going to get a dashboard. And when you get these 2 green lines, you're going to take this instrument long. This is Salesforce on a 5-minute. It just so happened to gap up to give you a monster winner. But that's the direction, and there's your entry. This is a short on GameStop. Down you go. Now, what is this looking at? Everything I just showed you. It's putting everything together. Market structure, the triple screen assessment of momentum, CHOP, everything. So when everything is perfect, you get a scanner signal. It's sort of like giving you a handout. It is tremendously accurate. Now, here's the dashboard. You can decide what you want to look at. You can look at the whole NASDAQ 100. I think that's too many stocks. You can look at futures. You can look at Forex. But when you see it pop up and it's green like Adobe, you know that what is forming is that green line. You roll over to Adobe, trading a 5-minute candle. You got 5 minutes to get over there and get your buy stop in. Plenty of time. And these trades are handed to you. And whatever hit list you decide is what you're going to set up here. And we will set this up for you. We do a white glove installation on this platform. Now, I don't know if you're ever going to use this, and I'm getting down to 5 minutes. I don't want to make sure, but this is historical volatility. The cyan line is implied volatility. I'm a big options trader. If I want to trade a weekly option, do I buy it or sell it? Well, if implied volatility is significantly higher than historical volatility, the option's very expensive. I don't want to buy it. I want to sell it. Let somebody else have it, and I'll take the premium for it. So it tells you whether you want to buy an options configuration or sell an options configuration. And you don't have to look at complex metrics off of Thinkorswim. The line is actually created for you right on your chart. This is always a 1-year historical look back, and this looks back the time that's based on your trading chart. Now, the entries are exact, the exit price is exact, everything's pre-configured. Now, here's the scanner, and here's your short on NVIDIA, $31.24. You see you have, this is red, the Laguerre is locked short at 0. You're below the VWAP, the C2 is red, market structure on your trading chart is red. This tells you that market structure on your 2 higher multiple charts is set to the downside. Everything is set up for a perfect short trade. Here's the entry candle. You're going to get a little bit of a pullback and then a huge move down. I didn't want to put in the percentage on the option. It was significantly big because I'm not one of those guys who put up 5,000%, 8,000%. Here's the dollar amount you made. If you wanted to trade this by buying a put, and that's what you would have done because historical volatility is greater than implied volatility, so you're going to buy it, you would have made an enormous amount of money on this move down. Here's Etsy on a 5-minute. I used to love to trade Etsy. It's kind of fallen off my watch list. 1842, scanner signal. Everything is perfect. The oscillator is heading up. Momentum is rising, buying pressure is accelerating. We break the VWAP on the candle. There's the C2, there's the 50, there's the 15. If you're not looking at this chart, you roll over to it at the close of this candle, you're in one tick above the close and up you go. Here's CRM, 5 minute, $2, no exit yet. I'm gonna move really fast here. Here's the short on Lemonade, 15 minute, $17.93. Again, I didn't put up the options percentage. It is appreciably big if you're trading a weekly. And I'm going to teach you how to trade weeklies the right way. Here's your entry on Penn Gaming. I'm very much into internet gaming. Right now that it's out of favor, I'm letting it retrace. I'm going to get it on the cheap, $5.76. Not a home run. We'll take a single or a double. Here's Tilray, a 30-minute, $45.48. Now just hang on 1 second. I'm just going to have Rory put something into the chat. And then I'm just going to really have to roll. Here's the chat. And you should have the purchase link and our phone number. Hold on 1 second. Hold on, I'm sorry. Okay, let's keep going. Now here's Apple. This is a yearly chart, and I can't get into detail on it because I'm down to 1 minute. Here's the NASDAQ, 221 ticks, same configuration, scanner fires. I mean, beautiful trades, crude 204 ticks, scanner fires, and you can see everything's aligned perfectly. This is a triple screen assessment. E-mini has been a pain in the neck to trade lately. Here's a 43.75 point move on a 30-minute candle. This was a hold 1, 2, 3, 4 days. There's the euro pound on a 2 minute, 24 pips, 9 pips down. Here's the euro yen, 2 minute, 17 pips. Here's the pound dollar, 10 pips. Right here's their scanner. Now, I believe this is the most powerful software and trading methodology available to the small retail trader. You saw that we dumped everything that everybody else is trading. You don't see any stochastics. Well, you do see the year, but we don't look for divergence. There's no Fibonacci. There's no price action. There's none of the stuff that everybody else is trading. Now, this is good. The deal I'm going to show you now is good only today. If you put your Skype number, your Skype and name if you're overseas, or your phone number and name in, you'll lock in this offer. It's optional for you. We are not telemarketers. Unless you invite us to call you, we're never going to do it. Rory will call you for 2 set minutes, or as long as the phone conversation. I don't think I'm going to be able to answer any questions. So if you have any questions, you're going to have to call. He'll call you and answer them for you. Now, here's the scanner. That's one of the add-ons you're going to get as a purchase today only. Thinkorswim's extremely popular. And we have a ton of people who buy the scanner alone. It gives them terrific entries, and they pay almost $1,000 for it. Now, you're going to be in the battle room with me for 1 year. This coming Tuesday, starts our 52-week cycle over again. So it's very rare. You got a great opportunity to come aboard. And we're going to inaugurate our new year with a 3-hour cryptocurrency masterclass from 1 to 4 o'clock for battle room members only. We're going to open it up to the public, and they're going to have to pay about $100 some odd just to come into this session that you're going to come in for nothing as a free add-on. And you're going to get my Elite Options Alert newsletter. I closed last year with 35 winners in a row. I'm a terrific options trader. I'm a B+ day trader and swing trader with futures and stocks. Options, I am really, really good. I'm going to give you all my trades. You're going to get them via SMS text message. You get exact entries. I manage the whole trade for you. I put out 5 new positions on Sunday, and they are all really running to the upside hard. Now,
That's really
this is
great,
unusual.
Mark.
Okay, let me just run to the offer. This is Danny. He's a priest, and he trades our system. He was going to give a testimonial. We're not going to have time to listen. I'm not going to have time. Here's a few more testimonials. We're not going to have time. Now, here's what I
Sorry
made.
about that.
Here's the offer, and then I'm done. Now, you're going to get tremendous support from us. I just want to show you me. That's my son. I'm a single dad. I raise him by myself. This is what gives me the ability to do it. And here's the offer. I'm just going to go right to the offer. And then last
And we
slide.
already put the link in the chat, right? The chat has got the link that you guys need for this.
Yep. So here, it's $997 lifetime. We give you free upgrades and add-ons. All right, listen, I don't want to I don't want to overstep. So, and I want to respect your time. So I'm gonna stand down. If you're interested in the offer, everything, the link is there. You're welcome to call us. Our phone number is right here. And I really want to yield the floor because I don't want to overstep.
This has been really fantastic. I really hate to cut you short, but we do have another speaker waiting in the wings. And I really appreciate you coming on today. People, don't forget that in the chat is the link to this offer. You can go look at it right this minute while you're listening. You don't want to miss the next Serge's presentation. This is going to be recorded. It is being recorded, and you will get notification of how to see it again, so you can get that again. But click that link in your chat now, and you'll be able to go right to it. And Mark, thank you so much.
And
I appreciate you being here with us.
I really appreciate your having me. Thank you so much.
You have a wonderful day. Bye-bye now.
You too. Bye-bye.
All right. Wow. Wow, wow, wow. Here we go. You should be able to see my screen now. We're going to move over, and I want to introduce Serge Berger of the Steady Trader to you. He's going to be talking to us about SOAR or crash, what's next for traders. And I just want to tell you a little bit about him. He is he's been an active trader since 1998. During his career, he's been a financial analyst. He's dealt in fixed income instruments at JP Morgan, and he was a proprietary trader in equities, equity options, and futures. He's also had exposure to a range of different asset classes, which allowed him to identify which asset classes and strategies best fit his goal of achieving consistent profits. Over the years, Serge created a trading methodology that divides markets into different time frames and characters, allowing him to more clearly and without emotions determine which strategies to apply in which situations. His account and those of his clients continue to grow during all different market environments because they focus only on the highest probability setups and they follow really strict rules. And in the markets, every day provides new opportunities and a different environment for traders to navigate through. So he's certain that with the help of their daily insights, analysis, and commentary, you will find the path to become a consistently profitable trader, all the while enjoying the journey. So I want to welcome Serge. I don't know if you are self-muted at this point, Serge. Let me make you the presenter.
Hi.
As well as hi.
Hi, how are you?
One more thing. I'm going to give you organizer as well so that you can see the comments. I don't know if you like to ask questions and get a little bit of interaction, or if you like people to hold their questions till the end.
Sure. Yeah, we can. I'm happy to interact. It's always a good thing to.
The great
able to
thing about
chat.
a stock market mania is that one can make lots of money very quickly. Is that the right slide for us?
Yep, that's the one.
Okay. All right. Well, you take it away and I'll step back in at the end.
Sounds good. Thank you so much. And thank you all for joining. I know the market's in rally mode here today. I hope you guys are all doing well. And I really thought what we would do is take a little bit of a step back and have a look at where we are in the bigger picture, kind of how we got here, and then what I'll do is I'll just quickly show you a strategy that you can deploy this afternoon if you want to. And we really think it's really important that everyone takes a serious look at this. What I'm going to show you here does not require you to change your life. It doesn't require you to change a lot in your trading either. But what we do know is that a lot of people are actually very close to making money in the markets. How many people in here are not yet making as much money as they like in the markets, right? I'm sure a lot of you probably raising your hands, and quite frankly, that's a good thing, because what we know is that most people that are willing to learn and study, they are actually very, very close to making this happen. So I think we're in a stock market mania, which does not mean that I think the wheels have to fall off the wagon here, but there's pros and cons to this. So the good thing is that we are able to make money very quickly, and I think a lot of people have noticed that. The flip side of that is that it's going to be very difficult for most people with time getting out of it. And what we do know is that ultimately a lot of people end up not noticing when the environment changes, and will ultimately lose their shirt at this point, probably the coming years at some point. And that's very sad. And we certainly want to prevent anyone from being able to do that. So, there's the famous Mark Twain quote, history doesn't repeat itself, but it does tend to rhyme. And so, some of the people out there are asking themselves, well, how much higher can things go? We've printed all this money, and, all the reopening trade past COVID here might be priced in, excuse me. And so that certainly is an interesting question. We'll get back to this here in just a second. A lot of you probably are more worried or concerned about what's happening literally right now and how can I make money today or tomorrow. Well, one thing I can show you is that if you look at the S&P 500 through a seasonal lens, the month of April tends to be actually a really good month. I think right now, looking at my screens here, the S&P 500 is up roughly, call it 5% for the month of April, which is a good month. Sometimes that's a good year. So the question is, how much more can it go? I mean, if history is any guidance, we could still go higher for the month. And the month of April chart, the long-term seasonal chart, does point to that, just as an FYI. Also, by the way, a lot of people tend to think that bonds and stocks can't go up together, and I just thought I would take a long-term chart. This is like a 20+ year chart, and it shows you all the periods in time over the past 20 years where stocks and bonds have gone up together. So stocks and bond yields, my apologies. So bond yields can go higher and stocks can go higher as well at the same time. It's not impossible. Just want to give you some perspective on that. We are in a situation where inflation's is continued to be on the rise. Here's 5-year break-even rates. The likelihood of the Fed raising rates at some point by the end of 2022 continues to go up, and we have started to see a bit of a change in the market structure. If you look at it through sort of a month-over-month lens, and the momentum trade has slowly started to stop working. You wouldn't know it by looking at the market over the past few days. But like, for example, Tesla, we actually got our sell signal, and I'll talk about this a bit later, in January on Tesla, and you can see the nice move it had to the downside since. What we also know at the same time, while we're seeing this sort of sea change in the market leadership, is a lot of people are still rolling the dice. And this is something that ultimately uses very well, but we need to be able to put this in context. So we know a lot of people are buying upside calls. We know there's a very heavy concentration still in some of those mega cap technology and related stocks, like Apple, which at some point made up 7% of the S&P 500 last year. The only other time a stock made up that much anywhere near it was IBM in the early 80s, and made up like 6.4% of the S&P, and that didn't last very long. So this all brings the question, when are we going to see a more lasting underperformance, relative underperformance of the stocks that have, for the most part, allowed equities to pull higher over the past 10 years? And if you look at the NASDAQ versus the New York Stock Exchange Composite, this is what's called a ratio chart. You can see it's kind of topping out here. Even peg the NASDAQ 100 versus, say, commodities, and that chart looks very, very similar. And so really what we're trying to set you up here is for what we think is possible to start taking place at some point in the second half of this year. In the second half of this year, we're going to be in a situation where a lot of the good news may have been baked in for the near term. Vaccinations are very widespread, not just in the US, UK, and Israel, but probably also in Europe and at least some other parts of the world. You know, the reality is that the stock market is a forward-looking mechanism. I think that's something that we really shouldn't understate. It's in fact, it's very difficult to overstate the importance of understanding that. If you want to put this to a lens of GDP, gross domestic product measurements, this is a forecast from Goldman Sachs, a public one I came across, and you can see their forecast for the Q2 and Q3 US GDP is 10% and 9% respectively. I mean, these are big numbers, but at some point it's going to start tapering off, and we're going to start to see more normalized levels of GDP. And the market, being a forward-looking mechanism, at some point will probably start to price that in. And we could at some point get into a situation where growth continues to normalize, meaning lower, but inflation remains somewhat elevated. And if we get into a situation like that, it'll be called stagflation, where we have more persistent inflation, but in this case, more moderating, or I guess obviously still slowing economic growth, if you want to look at it that way. So the reality is that the stock market does not like stagflation, and you know, in a situation like that, we are probably going to move more into a sort of, you know, version 2 of this post sort of, you know, post pandemic trade, where we start to see value equities outperform growth equities, meaning that NASDAQ 100 leadership will pause, I think, for some period of time, and it's going to cause a lot of change in the market structurally. We've seen a little bit of that already, like I said before, but I think there's a lot more potential for that to go, and it can really, you know, change things up in the algorithms that have really worked for the past 10 years or so. We also think something like emerging markets will probably start to continue to work rather well. This is an emerging markets versus the S&P 500 chart. And even gold could at some point start working in more meaningfully. You look at gold versus the NASDAQ 100, there's a persistent underperformance we've seen for the past number of years, and we think at some point that is quite likely to start changing again. So what are the 2020s likely to bring? What are the next decade here, the one we entered about a year and a quarter ago? What's that likely to bring if we look at it through that lens? And we think what we're likely going to see is much significantly lower stock market returns. Note, I'm not saying that I don't think we're going to fall into a complete crash period, but I think we're going to see much lower returns for something as simple as the S&P 500. And so if you look at some statistics around this, the S&P over the past 90 years has returned roughly 10% per year, again, long-term track record. Over the past 10 years or so, however, the S&P's returned closer to 14%. That's like 40% more. And we think it's very, very, very likely that we're going to see much lower, a much lower return stream going forward for the S&P 500. One way of looking at this, just very simply, is by looking at the price to sales ratio, and you know, where if you are at a level of price sales where we are right now, the return forward for the next 5 years is actually very, very low for the equity market. So just quickly, this is yours truly sitting here at my desk. I'm originally come from the investment banking background at JP Morgan and moved on to the portfolio management side. I am the head trader and chief investment strategist at thesteadytrader.com, and I'm also a managing partner and the chief investment strategist at Blue Marlin Advisors, which is a registered investment advisory company, which means that we manage money for people in layman's terms. Having said that, you know, while we are expecting the S&P 500 to return much less over the next 5 to 10 years, think closer to maybe 2 to 5% per annum compared to the past 10 years of 14% or so per annum. I think one of the problems that a lot of people struggle with is the month-over-month volatility of something like S&P 500. And I have one very simple but very important question I'd love everyone to participate. How many of you are looking to have a more regular stream of positive returns? Call it an income, for the lack of a better term, from the stock market. Type in yes or me or something like that into the chat box. If you would like to have a month over month, quarter over quarter, much steadier stream of positive returns, again, if you want to call that an income, or steadier hits with much less volatility. How many people are sick of making 10% a month and then losing 5 or 10%? And again, I would love everyone to type in yes if that applies to you. And by the way, I'm not doing this because I'm writing down your name. I'm doing this because it's important that you yourself are admitting that that's the case for you. So if you look at the S&P, I see a lot of yeses coming in. So if you look at the S&P 500 on a sort of month-over-month basis, what you'll find is that the returns are very random, right? You can have a typical year, big up months, big down months, and everything in between. And for a lot of people that are looking to have a more steady stream of positive returns, that's not going to work, right? So what we're going to show you is something very, very simple that you can implement. And again, it's very similar to what you're probably already doing, but a small tweak is going to make a huge difference. So if you want to have a steadier stream of positive returns, whether that's month over month income, quote unquote, if you want to call it that, quarter over quarter, there's a couple tricks I'm going to show you that really, really, really go a very, very long way. And if you do it the way we do it, I can just about guarantee you it's going to work for you. So most people have an equity curve that looks a little bit like this, where the mountain range here, where they make a bunch of trades, they do very well, winner, 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 and then they have like 1 or 2 losing trades, and they start right back from the beginning, and they keep doing this, right? And you've done this. I certainly am raising both hands right now. I've done this for way too long. I did it for way too long, I should say. And you have a bunch of good trades, and then it wipes everything back out. You start back from scratch, and not only problem financially, because obviously you're not making money. The bigger issue is that you are essentially frustrating yourself, and that ultimately leads to really bad habits. So basically, what we have found out over the past 23 years working with traders and investors on the money management side, even on the retail side, is that most people need income, a more steady stream of positive returns in at least one part of their strategies, just in order to be able to actually make money in the markets, be in the right frame of mind. And so think about this. What we know is that stagnating or losing accounts ultimately lead people to lose confidence in the strategy or even in themselves, breaking rules, forcing trades, and again, before you know it, any sort of risk management's out the window. So the way I like to think about it is, what if someone were to give you $3,000, $5,000, $10,000, whatever the number is, $20,000 at the end of every month, regardless of how you performed in the markets? Wouldn't you agree that you'd be more willing to stick to your rules, right? I think you probably would. So, this is a big deal. And so what we're going to show you is a strategy that does not require a lot of time. And I really mean that. This is no hocus pocus. This really does work. It's very low stress, it's high probability, and most importantly, it's very repeatable. Time requirement about an hour per week, and we're looking at a probability of a winning trade of about 80 to 90%. So out of 10 trades, you should have about 8 to 9 winners, and the 1 or 2 losing trades out of 10 trades are not going to wipe out all the gains of the past 8 trades, right? That's an important little nugget that I think a lot of people leave out. And so at the very core of this strategy lies this phenomena of sort of steep slopes that have gone vertical. I'm sure all of you have seen charts like these before. You could probably look it up at just about any chart right now, and it looks a little bit like this. And at some point, once a stock, an ETF, a currency, a commodity, whatever it is you're looking at, goes from steep to vertical, at some point, the move is no longer sustainable for a period of time, right? That's an important point. I'm not trying to call tops or bottoms here. It's a period of time. But again, it has to go from steep to vertical. And you can see this also works in the downside. You can have a steep drop and then a vertical collapse, and at some point the move is just exhausted for a period of time. And so specifically what happens when these slopes go from steep to vertical is that options get a little bit more expensive. Investor fear or greed reaches extremes, and the reward to risk for what I'm going to call a counter trend trade really become absolutely amazing. So that gets me to the real important part here. How many people in here have ever traded an option before? I'm just curious how many people have ever traded an option before. Type in ME if you've traded an option before. And by the way, it totally doesn't matter whether you've traded option before or not. You can do this whether you're a pro or not. Okay, great. Some people have, some people have not. Great mix. So the reason I want to quickly go through this is because I think a lot of people that look at options are being taunted these income strategies that they have no idea how risky they actually are. And I think a lot of times people that teach them or pretend to teach them don't know it themselves. And so here are some of the statistics that people will tell you, but I'll tell you these statistics all bite true unless this is done the correct way, or not only are they not true, excuse me, they are very dangerous. So the odds are strongly in favor of option sellers. Basically what people are trying to say that is that if you have an option like a call or a put and you hold it to expiration, you only have a 25% chance of making money. Think about that. Next time you buy a call or a put and you hold it through expiration, the statistics are very clear that you only have about a 1/4, 25% chance of making money. So what these people will tell you is that, oh, all you have to do is do the opposite. Instead of buying the option, just sell the option. And then that way you should have a 75%. That's just simply not true. And there's a lot of risks for that. We can go over the most important one here in just a minute. The longer you hold your short options, the better your odds of success. People want you to play this time decay game, theta. Has anyone ever done that, time decay? Maybe people have even told you to use like these short-dated weekly options to sell. Big no. Big no. Very, very risky for most people. And I think most people don't understand how unbelievably risky that is. And so these are some of the real pitfalls of people fall into, is believing these statistics unless it's done the right way. So what we're going to do is the following 4 simple, repeatable process step together for the next few minutes. And we're going to look for steep slopes that have gone vertical, that give us these signs of exhaustion, like I showed you before. And I'll show you also, by the way, how we find the entry points for this stuff. There's a little tool that you can use as well that we can give you. We're going to make sure that the implied volatility is elevated, which just basically means that the options, excuse me, are somewhat expensive. And then very specifically, we want to make sure that these are very liquid options. There's lots of volume. And what we're going to do is use what's called an options credit spread. Now, we do this in a very specific way, and I need to be very clear in this. This is not your traditional plain vanilla options credit spread. We do something very specific, and it's very simple. It's 1 or 2 clicks of the mouse on your broker statement to execute these trades. It's nothing complex, but again, we do this in a very specific way, which is why this works so well. So again, at the very core of the strategy lies this phenomena of the steep slope that goes vertical. And you can see when after the steep move, the stock goes vertical, it just becomes exhausted for a period of time. And it just simply can't continue higher for at least a 1 to 2 week time window, which is what our time window is. Maybe let's call it 1 to 3 weeks, roughly within that sort of time window. Same thing here, you can see Netflix at the time. I know Netflix, of course, reported earnings last night and collapses an historical chart just for reference. You can see a sharp move and then a complete parabolic move, and then it stalled for quite a period of time. So those are the points in time we're looking for. And so when these steep slopes go vertical, the upside becomes capped and the downside becomes floored or limited if they move to the downside. In other words, the asset tends to stall in price for at least a period of time. Again, we're looking at a 1 to 3 week period where the price tends to stall and actually even go in the opposite direction a lot of times for quite a bit. So this is what we're going to look at. So let's have a look at a few example trades. So what I'd like to do just for a few minutes is go through a couple historical examples. And then, because the market's open live right now here as we're here, I want to go into the live market with you guys and basically ask you to kind of blindfold me, and I'll show you that this actually truly works and that I'm not just making this up. Does that sound fair? So the first example just here is on Facebook. And again, this is a historical chart. We're going to go into the current market in just a few minutes, but I want to show you and actually teach you the strategy first. if that's okay. So you can see every time the stock went vertical out of this already steep move that it had, so here and here and here, every time it did that, it ended up, yes, it ended up mean reverting back, but more importantly, it stopped going higher. See how after the move, it stopped going higher for a period of time? That's what we're looking for. So I'm gonna go actually bring up my charting platform just so I can show you this a little bit better and draw some annotations. And so this is the same chart I just showed you a second ago, just here now I can actually draw some annotations. So let's look at this. Facebook rallied, and it rallied to the upper end of its trend at the time. Well, if the stock rallies up here, what are some of the things you could do? Any guesses? You could, of course, take some profits, right? That's, I think, everyone probably agree with that. If you want to be more aggressive, though, you could short the stock, or maybe you buy a put. Well, if you buy a put or you short the stock at this point here, then what is the one thing that the stock must do in order for you to make money? Any guesses? Stock rallies back up here, and you buy a put or you short a stock. What's the stock have to do for you to make money? There's only one thing, and exactly, it has to go lower. Unless the stock goes down, you're not going to make money. So basically, that means you have a 1/3 chance of making money, all else being equal. Why 1/3? Well, the stock doesn't have to go down, right? Could it do a sideways trot? Yeah, of course. Could the stock go higher to some extent? Of course, right? So when you make a directional bet, like buying a put or shorting a stock in this particular case, or buying a stock or buying a call on the upside, if you make a bullish view, all else being equal, you have a 1/3 chance of making money. In our world of creating a much steadier stream of positive returns with much less volatility and income, if you will, in a month-over-month, quarter-over-quarter basis from our portfolio in that one strategy, we need to do something a bit different. So in this particular case, instead of making the bet that the stock must go lower, the only thing we said is, you know what, we don't think the stock is going to go more than another 7 or 8% against us. And so what we did is we sold a call up here, and I'll quickly draw this in a bit more with a darker color. We sold a call up there at the 125 level. So we simply sold a 125 strike call, is what that's called in the options language. And against that, we bought another call for protection. So nothing, there's no naked options being done here. So basically, that means we make money whether the stock goes lower, sideways, or even in this case, I think 8% or so against us. How many of you like the idea of being able to make money when you could be completely dead wrong and you could still make money? How many like that? So what we did here in this particular example is we simply sold a call at the 125 strike level. We bought against that another call at 130, and that allowed us to be completely wrong even and being able to make money. So we make money whether the stock goes down, sideways, or against us, in this case, 8%. So we actually received a $1 net credit or $100 deposited into our broker account options contract. This was done for. Actually, don't even pay money to trade, you receive money. If you would have done this with 10 options contracts, you would have received upfront $1,000 deposited into your broker account. In this particular case, the stock did actually go lower after you put the trade on. You can see that. And I'll show you guys examples in a minute where that didn't happen. We made just as much money. In this case, the stock did go lower, and that spread, as it's called, was reduced from $1 down to 24 cents, which basically just means we got to pocket the difference. We made 76 cents in income, which translates into $76 per options contract, or a profit of $760. Done this with, let's say, 10 options contracts. But the beauty about this is that the stock didn't actually have to go down for you to make money. It could have just as well gone sideways or even up to 8% against you in this case. But of course, if you would have bought a put or shorted the stock, you would have only made money if it went down. Does that make sense? How many of you guys like the idea of being able to be dead wrong and still make money? It's pretty attractive, right? There's a caveat though, because a lot of people try to do something like this, but they do it in very, very risky ways, which they're not even aware of. So you guys might notice at the time we put this trade on, it was February. But at the time in February, we didn't use February options. We didn't use those short dated, I call them gambler options. We used April options. So we didn't use February options. We didn't use March options. We used April options, right? And this is important because if we would have, at the time in February, used very short dated options like again, some weekly or short dated February options, and the stock would have rallied, let's say 5% against us, we would have immediately lost quite a bit of money. You would have lost like 3 wheels on your car, right? You're toast. But because at the time in February we used April options, we have a lot more room for error, not in terms of time, but in terms of space. And what that means is if the stock would have said, let's say, rallied 5% against us in this case in February, having used April options, we would have been able to get out of the trade with a very, very small loss. Like you would have had a flat tire as opposed to losing 3 wheels with a short dated option. And so that's a really, really big deal. Is this starting to resonate? So if you like to have a steady stream of positive returns and an income on a month-over-month, quarter-over-quarter basis, and a lot less volatility in your portfolio, you've got to start placing your trades a bit differently. And this is what we think is going to make a huge difference, not just for right now, but also for the next 5 to probably 10 years. As markets are entering a new era, we've entered a new era for certainly the equity market about a year and a half ago or so. And so this is really important to understand. So I just wanted to point this out, how you can desensitize your portfolio dramatically, your trades, so that you don't have to be correct immediately in terms of direction, magnitude of move, and timing, right? I think that's really, really, really crucial. And I think from what I can gather here, a lot of you guys are really starting to see how this works. So let's look at a few more examples so that this really gets to the point. And then we're going to go into the live market so you guys can see that this actually works in real life, and I'm not just making stuff up here. But for example, Tesla, I think everyone knows the stock. And just to give you an example here, same idea. The stock, in this case, instead of going up sharply, it went down sharply, a sharp drop and then a vertical collapse. And it got extremely oversold. But we weren't willing to buy the stock and try to catch a falling knife. We were willing to say, however, that after a basically parabolic move to the downside, that the stock probably wouldn't drop a whole lot more over the ensuing 1 to 2 weeks. So we received 2,025 cents deposited into our broker account, which basically translates into $225. The stock went higher in this case, and we ended up making pocketing the difference between 225 and 43, which basically means $1.82 of income, or $182 of profit per contract, or $1,820 of profit with 10 options contracts. But again, the crazy thing is the stock didn't actually have to go up for us to make money. It could have just as well gone sideways or even lower. And so to really make I guess a pretty big deal about this, that if you want a steady stream of positive returns, you need to just desensitize your portfolio by structuring the trades a little bit differently. It's very simple, but it makes a huge difference, right? And so I'll show you another example. This one is a year and a few weeks ago. March 16th, actually, 2020, just as the market crashed. By March 16th, the S&P had dropped, I think, 28% or so over 3 weeks as we went into lockdown and COVID started to do its thing. And so we weren't comfortable buying the S&P on March 16th, but we said, you know what? We're willing to make the bet that after a 30% drop in 3 weeks, we don't think the S&P is going to drop more than another 18% over the next 1 to 2 weeks. And so we simply sold a put down here at the 190 level on the SPY ETF. We bought another protective put against it at 185, and we received money, $105 or $1,050 deposit into our broker account to make that bet. Now on March 24th, we were able to close that trade for an 11.4% profit. But you might notice if you look at this chart, on March 16th and on March 24th, the S&P didn't do anything. On March 24th, the S&P 500 was at the same level as it was on March 16th. It just basically went sideways. And that's a big deal. That's a really, really big deal, because we're able to make money whether the market goes sideways in our direction or even against us to a pretty decent degree. So if you would have bought a call or bought the S&P, not only would you have probably lost money, you would have also gotten stopped out. But because of the way we structure the trade, where we say, you know what, we don't think the stock necessarily has to go higher. We just don't think it's going to drop another 20% over the next 1 to 2 weeks after having just collapsed 30% over 3 weeks, right? So this is a really, really different way of looking at it, but it's very, very, very simple to implement. And if you do this properly, I just about guarantee you that's going to make a huge difference. And so let's go right into the market, because these credit spreads really can create a great layer of income for you on a month-over-month or quarter-over-quarter basis, just to be able to have an additional strategy. And so what I want to show you quickly as we go into the live market, and if you guys want to look at some tickers, feel free to type in some tickers so we can look at them together. But I'll show you guys a tool that we use to actually find these trading setups, these severely overbought or severely oversold conditions where you can put on these trades. And by the way, they also work for day trading, so we can look at that as well. But you can see those blue arrows, and you can see that to the right of the blue arrow, the stock stopped going higher. And again, here too in Alphabet, stopped going higher for 1 to 2 weeks, or here in this ETF. So let's have a look at this together. I'm going to quickly minimize or make this thing a bit smaller, and I'm just going to look at some of the ticker favorites. One of them that I mentioned quickly, just want to hit up before we look at some other stuff, is let me just quickly put this in. Was a Tesla. So Tesla, you guys recall I showed this earlier, but I wanted to point it out again since I promised I would show it again. Tesla, for example, gave us a severely overbought rate back there in early January, and what happens, you can see the stock after that sideways to lower for the ensuing 1 to 2 weeks. So all we do is sell a call up here, buy a protective call against it a little bit higher, and keep the trade on for 1 to 2 weeks and move on. It's as simple as that. You know, it just has a really, really high probability of winners. Alibaba, right? That's a popular ticker, it looks like. So you can see oversold signal here whenever this was, and you can see that how the stock ended up not going lower anywhere, actually went higher. So we sold a put down here, bought a protective put against it a little bit lower, keep it on for 1 or 2 weeks, and move on. And you know, it's a very repeatable process. Boeing, John, Boeing. Here's Boeing. Let me bring this over, John. This is for you, and I'm calling out your name just so you guys know I'm not making this stuff up. You can see Boeing here stops printing the arrow at the time there in June. You sell a call up here, buy a protective call against it, and keep it on for 1 or 2 weeks and move on. In this case, Boeing ended up actually dropping 23–24% very quickly. And by the way, if anyone's a day trader, I'm happy to show you this on a day trading chart as well. Peloton is another one. This one's for bars. Bars, this is for you, Ringsman. You can see Peloton overbought signal, and then the stock stopped going higher for 1 or 2 weeks. In fact, it ended up actually going down 12%. And you can put on those credit spreads. Again, if anyone is a day trader, I'm very happy to show this to you on an intraday chart as well, just so you guys can see not only that this works, not only how this works, excuse me, but also, you know, actually, you know, that it works. I'll just show you a couple more here that I see tickers coming in. Zillow is another one here. Zillow gave us an overbought signal, whatever this was, a few weeks ago, and then, you know, the stock stopped going high for 1 or 2 weeks, so you would have sold the call spread up here. Zillow actually ended up collapsing 6%. So, you know, you guys can see, I think, how this works. Let me quickly go into an intraday chart, since there seems to be some. So I'm happy to show you this. For example, how about, like, I don't know, the Russell, just trying to find like something you guys actually know, like the Russell 2000. Here, this is the Russell 2000 today. All right, this is today. Russell 2000, just before the market open, cash market open, give us an open. Since then, it is up 267%. This is live. I'm not looking this up. This is right now. This is taking place right now. Right. Let me see here. What other ones can I show you? I just want to make sure you guys see this so it makes sense to you. How about I don't know, I'm trying to find some like popular stock people follow, like Johnson and Johnson, right? That one's in the news all the time nowadays. So here's Johnson and Johnson, whatever this was a couple days ago. I just picked it up here. Oversold signal, stop printing, boom, the stock goes higher, and more importantly, it stops going lower. So, you know, what I'd like to do is, if you guys can see how powerful this is, by the way, there's also a scanner to this. And it's very simple. It just gives you an overbought signal and an oversold signal. And then, you know, it's as simple as that. So for example, you come into the trading day and you find, you know, the overbought signal. So ALXN is a stock right now, and you can see the past signals. This is one that's getting overbought right now. So the indicator is telling us that it's likely going to pause going higher for a period of time, or maybe even go down. You can see last time we printed the arrow, and that it's printing it right now. So very, very simple and repeatable process, as you can see. All right. So for those of you guys that like this kind of stuff, I'm happy to show you the indicator, which you can get along with course and monthly lifetime webinars. So we actually make this process available for all either swing traders, where you want to do the options credit spreads, or day traders even. You get everything you need. You get exactly how to use this. You get the indicator and scanner. You get lifetime member webinars. Every month we do 2 webinars where we give you an actionable live trade idea every single time. And also, of course, teach you exactly how to use the indicator, how to use the scanner, how to use the strategy, both for day trading and for credit spreads. The best thing about this is that, you know, you being a platform and a setup that teaches you exactly how to do the income from the stock market, have a much steadier stream of positive returns. You can install this on Thinkorswim, TradeStation, NinjaTrader, or even TradingView.com. So those are the platforms you can install it on. Very simple, repeatable, and it's called the Select Pro. I'm going to go through this very quickly. You guys can always send us an email if you have more questions on it. But if you like this kind of deal, what we're going to do here, and there's some testimonials we can look at as well. You can see Dave, for example, told us that if you follow the rules that Serge lays out, you can make good, steady income. So he sent us this, I think, last week or something like that, and some more stuff. So just quickly wanted to show you how this works. But basically, you know, if you're the kind of person who likes to generate income and a much steady stream of positive returns, I think this is something you want to look into. So if you were to just get the course itself, that'd be about $199. If you wanted the market scanning sessions, the member webinars, that would be closer to $500. The indicator itself and the scanner is $2,000, and the Iron Condor course, which we added recently, is there as well. So we're looking at a total package value of about $2,700. We're offering for the next 50 people for $297. That's 90% off. That's a one-time payment and you're a lifetime member. For $297, you can go to studytradersecrets.com/secrets. Would love to have you guys on board. Basically, we do a member webinar twice a month, every month. The next one is April 22nd, which is actually tomorrow, 11 a.m. Eastern, 8 a.m. Pacific. And so if you want to join and you want to also join that live webinar, we give you a live actionable trade idea every single time in those webinars. So come and join us there. Again, it's studytradersecrets.com /secrets. So that's how
/secrets, right?
Exactly, /secrets.
All right, I put it in the chat. I'm going to put it in there one more time just to be safe.
Perfect. I appreciate it, guys. And again, if you have any questions, you can always email support@thestudytrader.com. And yeah, so this is not a recurring fee. This is just a one-time payment, $297, and you're a lifetime member. You get the indicator scanner, the course, and of course the members webinars we do twice every single month, and you get a trade idea in actionable trade alerts every single time in those webinars as well. So if all you want is a couple of trade alerts every month, $297 for life, it's probably a pretty good deal. And if you also want to use the indicator and scanner, which of course is included in the course, we think this makes for a pretty compelling offer. So
There we go.
I want to thank you for putting on the webinar. Very kind of you for
Thank
having
you
us.
for coming and joining us. We appreciate it a lot. And
Thank you so
folks,
much.
I've put the link in at steadytradersecrets.com/secrets. And you will be getting an email about this. And you'll also be able to watch this again if you didn't get it through your chat. So thank you so much, Serge. We appreciate you being here. That was awesome.
Thank you so much. Take care, everyone.
All right, you have a good day. Bye-bye. All right,
Bye.
here we go. We have our fourth speaker waiting in the wings. I just want to tell you about Dan Passarelli. He is going to be talking to us about, he's with Market Taker Mentoring, and he's going to be talking to us about how earnings trading can be your most profitable trade. And, you know, we know that as a trader, it's your mission to empower yourselves with the knowledge you need to invest successfully. And that's why we've invited our next speaker here today. He's a trader, an author, and a world-renowned trading expert. He's a former member of the Chicago Board Options Exchange and Chicago Mercantile Exchange. He's a frequent contributor to Bloomberg Business Television, Fox Business News, CBOE TV, and a resource to journalists. He's also been an invited speaker educating traders for organizations such as NASDAQ, CBOE, the International Securities Exchange, CME Group, Fidelity Investments, TradeStation, TheStreet.com, and the Shanghai Futures Exchange, and that's just to name a few. He's also a marathon runner, a musician, and a world traveler. Please welcome Dan Passarelli. Dan, let me just make you the presenter and the organizer so that you can see the questions as they come in. Please hold your questions to the end though, folks, because I know Dan moves really fast. Let me see if I can get that open up here. Dan, are you with us? Can we hear you yet? You're self-muted. All right. Thank you.
Hey, Sherry.
Hey, there you are. Good deal. All right, take it away. Good to see you.
Yeah, good to see you as well. All right. All right. How you feeling today, folks? I'm Dan Passarelli. Thanks for joining me. I'm so excited to be with you right here and right now. Today, I'm going to share with you how you can replace uncertainty with confidence so you can profit consistently no matter what the stock market's doing using my simple, data-driven, real money proven earnings trading system that literally takes 3 minutes to trade. This is what I do no matter what the market's doing, including and especially in this market right now. With unpredictable news, sudden market swings, meme stocks causing market to sell off, and huge hedge funds collapsing, this market's been tough for a lot of people lately. A lot of traders I've talked to haven't done as well as they'd like to have because they've fallen victim to surprises, head fakes, and misleading narratives that make it impossible to get the results that they want and the financial freedom that you deserve. It's tough lately, and it's not your fault. This is the best opportunity that I know of to reclaim a feeling of control over your trading and quite possibly make the next 6 months the best months of trading you have ever had. This unique opportunity involves trading around earnings announcements, and I've cracked the code on how to do it. And since earnings season has just begun, I've agreed to come here and speak with the Traders Exclusive family of traders and introduce how this works and give you the opportunity to take the next step and start using this system immediately. Sounds great, right? Before we get started, I need to point out options are not for everyone, and you should read characteristics and risks of standardized options before trading. You can get a copy of that by calling 1-888-OPTIONS. Now, let me see if my camera's working here. Is it? Oh, it is. How about that? Okay, good. Each of us has the power within us to make trading a source of continuous wealth. Today, I'm going to share with you how to unlock that power. And this is my promise to you. I'm going to share with you how you can replace uncertainty with confidence so you can profit consistently, no matter what the stock market is doing, using this simple, data-driven, real money proven earnings trading system that hundreds of our students have used to go from that demoralizing feeling, we've all felt it sometime, to that feeling of satisfaction and self-assurance that we all know is possible. And that is powerful. This can literally transform your life, because when you're confident, you trade better. And when you trade better, you're more confident. It's a positive circle, and it's easier to experience than you think. This earnings trading technique makes it all possible. It uses my proprietary earnings trading system. And at the end of this presentation, I'll share how you can take the next step and start getting immediate results. What do you say? Fair deal? Are you liking this? And don't be afraid to participate here. Please go to the questions box and give me a yes. Give me a yes if that sounds like a pretty darn great deal today. Yes, says Teresa. Yes, says Brad. Yes, says Kenny and Steph and Joe. Excellent. Good, good, good. Don says, right on. I like it. Dono, in order for you to get the most out of this, I ask that throughout this presentation and afterwards, make this about you. Consider turning off your cell phone, closing Facebook, all your other open tabs. If you have a busy household, maybe shut the door to the room you're in and let yourself get immersed in what I'm about to share. Let it become part of you. Let it in. And be sure to stay till the end of the presentation. The most important things that I'll share today will come later. And I'm going to hold all questions to the end, like Sherry said. So let's keep it all positive and let's have some fun, shall we? This is a pictorial representation of who I am, what I do, and some of the organizations that I've worked with. I've traded down on the floor of the Chicago Board Options Exchange, wrote two of the most popular books on options trading, worked with every major broker, options broker anyway, in the US, as well as pretty much all the options exchanges in the world as well. And I get to be on TV a lot. I guess if you spend enough time in any industry, you get to do some pretty cool things. 28 years in options for me. But enough about me, let's talk about you. I know some of you have traded options before, and I know some of you have not. So here is the thing. If you've traded earnings, I can help you do that better, more profitable, with less risk. And if you've not traded earnings in the past, then you are in the right place at the right time, because I am the foremost expert on trading earnings. And those of you who know me, you know I'm not cocky or arrogant or anything at all. I'm definitely not saying that because of ego. I'm saying it because of my experience. And that alone is why you should follow other successful people in this business, right? Because their experience proves that they know when and how to take money from the market. I am here today to share with you exactly what I look for in my process before I make an earnings trade, and how simple it can be. And so I'm not shy about saying this. Now, I'm also not saying that earnings trading is easy by any means, but I have my strategy down to a simple 3-minute scan that will blow your mind. I've taken the decision-making process of whether a trade is worthy of your time, money, and energy all the way down to as little as the amount of time you should spend brushing your teeth. And today I'm going to share that process with you. Okay, you're going to love this. Do you mind if I share a quick story with you? Give me a yes. Yes, do you mind if I share a quick story with you? Joe says nope. Therese says nope. Alex says yes. Brett says no. I know, I word that kind of funny. I think yes means no, but Michael says, I love stories. Stephanie says, go for it. Benson says yes. Okay, good, good. All right, so listen, there I am with my little sister. This is probably 1979 or something. And a lot of kids think that when they get older, they want to be a doctor or a fireman or teacher of some sort. But for me, I wanted to be a trader, even at that age, which I know is kind of weird, right? But I did. I saw traders on TV and in the movies, and growing up in Chicago, there was a lot of it on the local news. I'd see traders in their jackets in the financial district. I'd see them on the train. These successful traders were all around me in Chicago, and it excited me to think that they could make money doing this, and good money trading. So right out of college, I took a stack of my resumes and I went job shopping. I literally knocked on every single door of the Chicago Board of Trade building, handing out those resumes, and guess what happened? Can anybody guess? I got a job. Lo and behold, I got a job, and I was making $9,000 a year. Yeah, I said that. I enunciated $9,000 a year, a four-figure salary. All my friends were making $30,000, $40,000 a year. I basically left, probably 30 grand on the table for about 4 years. So I figure I paid over $100,000 for my options education. I worked my way up from a runner, which was a totally entry-level position, to becoming one of the biggest traders in my pit. And I actually started trading in 1998, and life was good. I was living the dream. At that point, it might have been the best time in 30 years to be where I was. In a lot of ways, I just happened to be in the right place at the right time. Trading was easy. You could make some mistakes and still make good money. Because do you remember what was going on in 1998? What was going on in the market around that time? Anybody remember? There was something, the media called it, let's see here. Oh, .com, says John. Right, and Michael says that, and Chester says internet, right. Yeah, that's right, the internet.com bubble, right? Type a yes if you traded during the .com bubble. Give me a yes if you traded during the .com bubble. JP says yes. Steph says yes. Chet says yes. Joe says yes. Okay. Well, I'll tell you what. Even if you didn't, that is okay, because I'm going to share with you an opportunity that you can take advantage of right now that can make you the same sort of gains, and it's just as easy to trade, if not easier. Now, speaking of that old internet bubble, you know what happened, right? In fact, you know what eventually happens to all market bubbles, right? That's right. They all pop. And for the most, when the internet bubble burst, it didn't really look like this picture that you're seeing here. Like this cute little girl who's like, oh, yeah, blow bubble, and then boop, hi, like it didn't really look like that when the internet bubble burst. It looked a little bit more like this. This is basically what happened to a lot of people. And I don't really talk about this a lot, but this is kind of what happened for me. I'd never seen a crash like that in my career at that point. And back then, I didn't know how to handle it. In some ways, I did better than some, but it was bad. All of a sudden, nothing worked as it had before. Trades I'd normally crush weren't making money. I started to lose my confidence. I was constantly second guessing myself. I'll never forget this one time when I just got completely run over by a trade. I lost $500,000 in one day. That night, I had to go home and have a conversation with my wife. The plan before that was to put my next bonus away for my kids' college funds. And now that bonus was gone. Kids' college funds were gone. I wondered if I'd still have a job, if I'd be able to keep my house. So now everything was different. But that's when I knew I had to create a trading system that works in all market scenarios. And as fate would have it, at that moment, I was presented with an opportunity. And it's funny how opportunities seem to come right at the right time, isn't it? And when you get an opportunity, what do? What do you do when someone says, 1, 2, 3, boom, here's a great opportunity? You take that step, right? Look, there are two types of people in this world. There are those who second guess everything. Those are the people who are always looking back, not forwards, who hesitate. And then there are people who take action and create success. And from the outside, it seems like those people are always getting lucky, but that's not it, right? They take action. Go to the questions box again, type a yes if you're the sort of person who looks forward and takes action. If you take that step, I want to see who we're dealing with here today. Are you the sort of person who takes action, takes that step? Yes, says Brad. Yes, with the exclamation point, says Dono. Yes, says Joe. Yes, says Alex. Yes, says Chester. Yes, says Michael, says always leap, never look. Steph says yes. Stephanie says yes, exclamation point. JP says yes with 3 exclamation points. That is awesome. The most successful traders all have the same trait. They take action. It's about having an investor's mindset. It's about investing in yourself. You can't make a profit if you never make the trade, right? Like many opportunities can, this opportunity that I was presented with changed my life. And it set me down the path that I'm on today. The exchange asked me to come and teach classes for them. And I found that this was my calling. And that at that time, I started to trade in a regular non-professional trading account like you. I was learning different ways to trade than I was used to. And I discovered that there were strategies that I wasn't using down on the trading floor, or at least not trading them the same way, that were very powerful, that could make money in all markets, up or down, even the most unpredictable of markets. I made it my life's work to give back to the trading community and share these strategies with all traders and empower you however I can. That's what led me to creating this earnings trading system I use and all of our top performing traders use. Now let's go back to simpler days. This is pre-market crash, pre-COVID market crash, right? Goldman Sachs was up 23% over this 12-month period. Question: would you be happy with a 23% return? Would you? I'm taking a poll here. I need everybody to answer. This is not a rhetorical question. I'm going to read the answers back. I want to know, would you be happy with a 23% annualized return? Annual return. Brad says yes. Steph says, oh, yes. Paul says yes. Stephanie says yes. Joe says no. Alex says yes. Dono says no. Holy cow, we've got a market here, huh? We've got some differences of opinion. That's interesting. Michael says depends. All right, good hedge. We like hedgers here in option trading, right? Now, I think some of the folks who said no or it depends have an interesting perspective. And I like it, because 23% a year is tough for some people. But what if I told you there's a strategy that it doesn't matter if the market goes up or down, is volatile or calm, and you can still make money consistently and potentially really good money? Here is the news. Traders can do better than returns like this in all markets, and you have to. Interest rates are near zero. That's bad for banks. The market's very volatile and hard to predict. That's bad for money managers. But do you know what saved firms like Goldman Sachs lately? Their trading units. Here, take a look. Goldman Sachs has 36,600 employees. The average salary is $367,564. And that includes the interns who get coffee and pick up the dry cleaning. That's a total of $13.5 billion before bonuses. And traders' main compensation is their bonuses. So in order for Goldman Sachs to make enough money and pay out $13.5 billion and all those bonuses and the real estate and taxes and all that stuff they got to do, and still retain enough money for the stock to go up 23%, Goldman must make hundreds of percent a year. These are the kind of trades that professional traders make. This is why they make 300 or 400 grand a year before those gigantic bonuses. When I started on the trading floor, I started with a $30,000 trading account. Making trades like this daily and weekly and monthly enabled me to turn that $30,000 well into the seven-figure area, okay? That's a lot more than 23% a year. This is what's possible. This is what traders are doing every day. And it's not just professional traders. This is Vic. He's one of our traders who trades our earnings system. Vic says, I've only been trading for about a year, but 2020 was one of the most difficult years, if not the most difficult year to trade, especially for a newbie like me. In spite of all the challenges, huge market up and down swings throughout the year and all the crazy stuff happening, I actually did pretty well overall, increasing my account value by over 30% between June 20th when I went live and the end of the year. That comes out to about a 60% annualized return. And he is brand new to option trading. Imagine what you could do with a little experience. So there are several advantages to option trading. First, they're market independent. About 2 weeks ago, I was talking with Guy Adami, who many of you probably know from CNBC, right? So we were talking and we both agreed that, look, neither of us can predict direction on earnings, and we believe that nobody can. Like between the two of us, we've been doing this probably 70 years, right? Neither of us have ever met a person who could predict the direction on an earnings announcement. It's not possible, not in the long run. So I came up with a system where it doesn't matter if the stock goes up or down. They're very short term on each trade, limiting broad market exposure. There's potentially leveraged profits, hugely leveraged profits. There's an extremely simple yes/no test to screen trades. And the opportunities, while they do last all year, they're concentrated into a short period of time, earnings season. And the best, and so by the way, talking about earnings season, the biggest week of opportunities for earnings trades this quarter is next week, starting April 26th, Monday, April 26th. In fact, if you're taking notes, grab your pen, grab your paper, and write down April 26th, and underneath it, write, be ready. All right, April 26th, be ready, and then underline be ready, okay? That's when there are literally hundreds of earnings trading opportunities. I like to call that money week because there are literally just so many opportunities. It's crazy. And opportunities are the lifeblood of trading. I mentioned, like, it's an investor's mindset here, like, right? Like, if you are to be successful, thinking like an investor is essential. We are at the beginning of a life-changing time to trade. So when is the best time to be prepared? The best time to get started, if Money Week, April 26th is, what is that, 5 days away. You want to be ready for it, right? When do you want to start? Tomorrow? Sunday? Sometime in the middle of next week, next month? Oh, maybe we'll let a couple quarters of earnings go by, right? When is the best time to get started? Joe says right now. Sherry says right now. Teresa says now, all caps and an exclamation point. Brad says now. Alex says right now. Right. And so look, the most important thing about earnings, Steph says now all caps, the most important thing about earnings is that they work, right? It wasn't until I was a trader, like most of the traders attending this webinar, trading in a regular non-professional account, that I discovered the power of time spreads for earnings trading. Now, ironically, after trading literally thousands of time spreads on the trading floor and honing my skills with them, mostly in the form of risk management and execution, I learned the last 10% nuance that pushed the power of time spreads over the top for me in a rather unique way. So this is probably 6 years ago or something like that, right? Long story short, I found myself on the phone with a producer from Bloomberg Television. And he said, hey, look, Dan, tomorrow is earnings for Apple. And we want you to go stand in the pit. We're going to put the camera on you. We're going to interview you. And, I'm thinking to myself, okay, man, that's pretty cool. I'd never done anything like that before. Honestly, I was a little nerdily excited, if you will. And I said, okay, great. So you want me to talk about Apple earnings, right? And he goes, yeah, in fact, we want you to give our viewers a trade idea, a way that they can trade Apple earnings. And then it was like somebody took the needle and scratched it across the record, and the whole party stopped dancing. And they were like, wait, what? Because remember that story I told about when I was talking to Guy Adami a couple weeks ago? Like, that's not what I do. I was a professional trader. Professional traders typically don't trade earnings. In fact, at one point, I was in the top 5 traders in my entire firm. And there was over 50 traders, well in the top 10% of the traders in my firm, one of the biggest traders in my pit. My risk manager did not allow me to have a position going into earnings because they're so unpredictable. And so I was like, oh no, what am I supposed to do here? This is not my thing. And so I was like, oh man, it's an opportunity. I kind of want to be on TV. So, oh, hey, give me 1 second. Let me call you right back, okay? I hung up the phone. I ran over to my trading station, and I was like, okay, how can I trade this? I can't buy calls or buy puts because I don't know the direction. Can't buy straddles because they're usually too expensive. We'll talk about that more later. Credit spreads, too much risk. Cash cured puts, way too much risk. And then I looked at a time spread, and I was like, wait a minute, hold on a second. This is a great trade. This is like so powerful. So I immediately put the trade on, got back on the phone, went down the trading floor, did the interview, trade worked out as a charm, made money, and I was hooked. I was hooked. And later in a couple slides, I'm going to share with you some data that then gave me the black and white proof that this was no fluke. When the right criteria are met, this is a genuine consistency trade that can be used over and over again to crank out consistent profits with confidence especially during specific periods of the year, like earnings season. All right, so a little bit of a crash course for those of you who are not familiar with time spreads, and about a 30-second review for those of you who are. So a time spread is when I buy one option and then sell another option that has less time until expiration, but has the same strike price. Both are calls or both are puts. Now, the data show that these usually work out great for trading earnings, as you'll see on the next slide, when certain criteria are met. And this is really important. I'm definitely not saying, just go out and trade a time spread on every single earnings play. That would be a disaster. That would not work. But when certain criteria are met, these work out great. Then there are other times when other criteria are met, when we use straddles or sometimes a couple other trades. Straddles are often weak when it comes to earnings because of the implied volatility buildup leading up to earnings. But when we do our yes/no test, will show that there are times, less than 5% of the time, when they work. Mostly we're going to stick to time spreads. Let's look at why. All right, there's a lot of data here. Don't get hung up on trying to read all the numbers. Later, I'll explain a way to simplify all this. For now, here is what's important. Look here. Here's what this slide shows. If you sell short-term options the day before an earnings event, they lose value greatly once earnings are announced, the next trading session, which is good. Now, longer-term options also lose their value between putting them on the day before earnings and then taking them off after the announcement. But the key element of this observation is that short-term options lose way more value than the longer-term ones, which is great. So what this means and what this essentially proves is that when certain criteria are met, time spreads around an earnings event is effectively a long-run consistent winning strategy. And you can see here the results. Now this is where I'm going to skip that for a second. These are basically the steps to follow through the earnings season. There are a few details involved, but this is basically the gist of it. So write this stuff down. First, we find all the stocks that have options listed on them and have earnings coming out after the close today or before the open tomorrow morning. And we do that every day during earnings season. Are you with me? This is important. We can find several trades a day, and sometimes there are hundreds of opportunities. For example, next week, starting April 26th, there are literally hundreds a day. Again, that's an extremely important week, money week. We screen those trades using the yes-no screen technique to see if we should continue on with the potential trade. This is your first step and will literally save you hundreds of hours of your precious time and make your life so much better. Not to mention, it'll ensure that you're only trading the best trades, the ones with edge, meaning they have a statistical advantage in your favor. So your win rate increases and your winners are bigger, right? Like this. So we only continue on with the trades that have a positive term structure of volatility, and the greater the term structure, the better. This step is critical. This is what I did on the trading floor every single day, and then I put it into our earnings trading system to make this simple for anyone to follow. Next, we run the is-was check by modeling the spread on tomorrow's days with the variant vol crush on both the short-term and the long-term option, based on a partial reversion to the mean, but also relative to realized volatility. And we compare that to the past to get the modeled endurable gap, okay? Modeled endurable gap is just my way of making this completely foolproof in black and white. So it's super simple and easy for you. Once you have that, you'll know exactly which trades to put on and which to stay away from. Now here is where most people go wrong. We put on the time spread immediately before earnings. This is less than a 24-hour trade. It's the shortest trade we teach at Market Taker, and that is critical. We follow the MTM proprietary earnings trade technique that I just shared and exit the trade at the precise time the following day. Everyone screws this up, but I'll share with you how you can get the timing right later. Then it's just rinse, wash, repeat. This is a trade from a past earnings season in McDonald's, and we went through the checklist, all the criteria lined up, and so this is the trade that got triggered for us. It's a time spread in McDonald's. We would have sold to open 10 of the 4-day to expiration 165 calls at $1.75, and at the same time, as part of one single trade, but to open 10 McDonald's 11 days to expiration 165 calls at $2.11. So paid $2.11, collected $1.75, that's 36 cents a spread. Earnings comes out, we go through our closing checklist, which only has 3 steps on them, but they're critically important. And once those 3 steps lined up, we could have taken this trade off by simply buying back the one we were short and selling to close the one we were long. So we could have bought to close 10 of the now 3 days. Yesterday it was 4 days, right? Now it's 3 days, 165 calls at $1.29, and then sold to close 10 of the now 10 days, was 11 days, 165 calls at $1.81. So we paid 36 cents, collected 52 cents. The trade made 16 cents on a 36-cent investment. That's 44%. Let's make this more tangible. If you bought a 10 lot, you'd have invested $360 and made $160. Factor in commissions, and of course, this is a pretty solid trade. Now notice, and this is important, I wanted to make this as black and white as possible. So I assume buying the offer and selling the bid for presentation purposes. But in reality, because the bid-ask spreads get so wide, particularly on closing the trade, which is almost always the case, if I'd have used our technique for middling the market, profit would have likely have been a bare minimum of 20 cents better, which is $200 more on the 10 lot, or more like 100% return in this case. But again, I just wanted to show this example in a pure, unarguable way. In reality, managing the bid-ask spread is where most people go wrong. People leave thousands of dollars on the table every earnings season by not doing that one little part right. And the results that I show here are sort of the worst case scenario for this particular trade. And they're good, but they can be great. So now I want to make this very realistic and show you exactly how this works in real life when you middle the market with the MTM 2520 middling technique. These are some screenshots of my account on an earnings trade that I made in my real account in a past earnings season. This is Oxy. So I went through my checklist, all the criteria lined up. And so this is the trade that triggered. I bought to open 20 of the Oxy February 66 calls at $1.49, sold short 20 of the February 15th 66 calls at $1.31. I paid 18 cents for this entire spread. Now notice this, the ones I had to buy to open, the February 22nd ones, they were offered at $1.50. That's where the market says I can buy them, but I didn't pay $1.50, did I? I paid $1.49 only. So I paid less than I should have. And then the bid on the ones I had to sell were $1.30, but I didn't sell them at $1.30. I sold them for more. In fact, between the bid and the offer, I sold them for $1.31. And these are my actual trade execution prices. So I actually saved 10% on this trade. Because I use this technique, I'm starting out the trade 10% better than a typical trader. Now, the day ends, earnings comes out, and the next morning I wait until the 3 criteria line up and it triggers my exit. I put in an order to sell at 30 cents and I got filled, but I only got filled on 2 of them. So I just follow my system and I go down to 27 cents on the balance. I get filled. That's about a $279 worth of profit in money terms, or a 51.7% profit in 1 day, less than 1 day, less than 24 hours. So these 2 trades are solid trades, right? Do they all work out exactly that great? No. Every once in a while you get a stinker. And this was one that I made with, again, in my real account with real money. There's screenshots from my trade log that didn't work. It was an MGM. I bought to open 30 of the March 1st 29 puts at 91, sold 30 of the February 15 29 puts at 71. I paid 20 cents, and then this trade just really got away from me. Like, I was like, really got away from me. But did I panic? No. This is a system. Work the system works. I waited for the 3 criteria to line up, and that simply unemotionally triggered my exit of the trade. Put in my exit, I got filled, I closed it at 19 cents. That's a 5% loss in 1 day, no big deal. And I can go on and on like this. This is Las Vegas Sands. It's another trade that I made. Bought to open the May 68 calls, sold to close the April 18 calls, 68 strike for both, paid 50 cents for this spread. The next day, the 3 criteria line up, check off my list, and I collect 70 cents. That's a 40% profit in one day, or $300 minus commissions. The key here is consistency, driving consistent profits. If you can make $300 on one trade, $500 on another trade, $280 on another, and there are hundreds of opportunities in a single week, how much do you think you can make in a single week using this strategy? In fact, let's take a poll. I want to see. How much money do you think you can make trading this strategy in a single week? Give me your answers. If you can make 300 on one trade, 500 on another, 280 on another, 700 on another, and next week there are hundreds of opportunities to scan through a day, how much can you make in a single week trading this strategy? Let's take a look here. Alex says 2K. Chester says 10K. John says $3,000. Teresa says maybe 7,000. Okay, look, that's why a consistent system is so powerful. And that's why management is so important. Make sense? Management makes money. That's the 3 M's of trading. Management makes money. If you can follow a checklist, finding, analyzing, setting up, and making the trade is simple. And closing the trade is simple too. We simply take it off the next day, but it requires just a little bit of nuance. I will share a resource to make those nuances super simple in just a moment. But for right now, keep in mind, this is a system, and that's why it's easy. Work the system works. Now let's talk about realistic expectations. You create your own reality. As they say, you make your own luck. You take the actions that make your life what it is, right? And I'm not trying to be like philosophical or anything, but like, don't you believe that that's true? Don't you believe that the actions you choose determine your future? And if you don't take action, if you trade the exact same as you do now, nothing changes, right? It's not possible. Profitable trading is a reality for a lot of traders. We have traders in our online community chat room who are some of our top money-making students. They're really successful, regular folks just like you and me who've made the decision to be profitable, to do it, to make that choice. And by the way, in a moment, I'm going to reveal to you how you can get access to the MTM community chat room for free for 6 months. Now, how often can I find trades like this? All throughout earnings season, there are literally hundreds. Next week, there are hundreds a day. Are these returns common? Yeah, those were literally screenshots of my actual trading account. And earnings trades can yield highly leveraged returns with low risk. What if the trade doesn't work out? They're not all going to work out. I showed that with you because I want you to have realistic expectations. But risk is limited, and more importantly, management, and can be a small fraction of possible gains. Now, here's how to make this work. Excuse me one second. This is a simple process that anyone can follow, and the timing is urgent with earnings season already having begun. You can make the next 6 months your best months of this year and repeat that success in future earnings seasons throughout your career, throughout your life. You can finally make your trading easy, and it's about time, isn't it? Time is the most valuable thing in the world, especially for investors. Isn't it better to make an investment sooner rather than later? Like, if you were to own Tesla stock, would you like to have bought Tesla stock yesterday or 5 years ago, right? Waiting and passing up the opportunity to make money, to have profit, passing up quarter after quarter of foregone profits doesn't make sense, right? Your time every day is valuable too. This earnings trading system, it literally takes just 3 minutes a trade. It's following a simple checklist. It takes all the guesswork out, and that not only saves you time, but it reduces your stress level, which makes you trade better, right? Are you getting this? This is the Total Earnings Domination All Access Premium Package. In this course, I'm going to share with you how to replace uncertainty with confidence so you can profit consistently no matter what the stock market's doing using my simple, data-driven, real money proven Total Earnings Domination system. And here is just some of what you'll learn. How to easily scan the market for earnings trades. Where to get real-time data that pinpoint the winningest earnings trades. The best time of day for entries and exits. That's so important. The yes-no screen technique blueprint. The earnings time spread risk checklist to maximize your gains and minimize your losses. Calculating the is-was gaps, how to manage wide bid-ask spreads on closing the trade. You now have a new opportunity to trade more consistently using a strategy that works in all market conditions. To get a blueprint for earnings trading and watch live setups of earnings trades so you can easily follow along and to make the next few weeks your top performing weeks yet. This is our Total Earnings Domination 6-month all access premium package. First, let me share with you what you're going to get with this class. You begin with the brain dump part of the training right here. The secrets to trading earnings bootcamp video. I'm going to put 28 years of my experience into your head with one short video. This is the keys to the kingdom. This is a $2,995 value. And why is it $2,995? Because if you can make the kind of money we're talking about consistently on daily trades throughout just next week, and throughout the rest of this earnings season, and for the rest of earnings seasons this year and forever, this small one-time easy investment can pay for itself over and over again for a lifetime. And as you'll notice, this is a one-time small easy investment. There's no renewal on this. Now, isn't it important to make sure that you can put this knowledge to use, that you can actually do it, right? Today, you're going to get hands-on training, okay? Starting next week, April 26th, on Monday, in 5 days, you'll log in and watch me trade live in a real money account. So you'll see the system being traded and you'll make your first trade together with me as a group. This is the ultimate hands-on training. And we literally want you to have this mastered. So you're also getting our 4-part masterclass, on-demand video masterclass, earnings trading techniques from 2 decades on the CBOE trading floor. You'll know exactly what to do every single time. This puts the power into your hands, and that is important. Now, you'll also have questions. So you're also getting 6 months of the MTM community chat room. You'll log in and get all your questions answered by me or our other coaches or our top students. But another huge sort of secret benefit that I shared with you earlier is that the MTM community chat room is where our top money-making traders log in and post their trades live real time. So this is an all-access premium package valued at $7,437. But I want to make this a complete no-brainer, completely irresistible, so you can confidently, immediately begin to get results right now. A 1,000,000-mile journey begins with the first step, and this is that step. Go right now and get all this for a small, easy investment of $497. 1, 2, 3, boom. Go to markettaker.com/TED. That's market like stock market, taker like take what is rightfully yours, 2 T's in a row, markettaker.com/TED. And you are going to get all this for a 93% off massive discount. And why would I give such a discount? Why would I give such a massive 93% discount, give you this $7,437 package for just $497? Because earnings season has already started, and I want you to be one of our 1,000 success stories that we strive to create this year. People who take action are the ones that can become great traders and be one of those success stories. When you see an opportunity and 1, 2, 3, boom, you take it. So to reward the traders who will move forward, this 93% off is valid only for the first 30 people to join right now. It's only 30 people. Now here's a special extra bonus not on that last slide. I want to make sure this works for everyone regardless of your experience level as an option trader. Even if you're brand new to option trading and never made an option trade in your life. To make sure this works for everyone, today you're going to get the Options Impact video course. This on-demand course levels the playing field for beginner option traders. It covers all the basics you need even if you never traded an option before. And this is a $497 value. You're going to get this free today. Now, here is the big one. And this is actually not for everyone. This is for action takers only. Action takers, you are going to get this course that every one of our top traders has gone through. We're going to share with you live weekly drill down master sessions together. This is the MTM TradeSmart Workshop online education series. This is where I pull back the curtain. Each month we pick a different topic to drill down on and give you expert understanding of it so you can achieve mastery as an option trader. Now, I can't open this bonus up to 30 people. I just can't. I can only invite a handful of traders so I can manage this process with you. Look, I take this very seriously. You are investing in yourself today, and so am I. So I want to have quality control. So it's essential I keep this bonus, this part of this class, very small. Every week, this inner circle group gathers online, and we're going to continue tomorrow the Gaining Edge with Simple Math for Traders, which is at the heart of the total earnings domination system. For your convenience, these are all recorded. So as soon as you join, you're going to get a username and password. With your password access, you'll instantly get access to tomorrow's class, plus these recorded classes from the past 4 months, hands-on option trade adjustments, hands-on portfolio management and protection, how Dan Passarelli trades options, and more. Now, this is a $1,794 value. I am opening this up only to the first 12 to join us right now. This is our fast action bonus only for the first 12 to join us right now. 1, 2, 3, boom. And look, this earnings cycle is one of the most important in the entire history of the stock market. Analysts are waiting to see whether, what the earnings are in order to give guidance for the future. And that means traders can make more money than they ever have before. This process is starting right now. When you enroll today, you'll have just enough time to get through the brain dump training of this class by watching the boot camp video and the master class to be ready for the first live class on Monday. These 5 live classes are probably the most important classes that you will take this year, probably this decade. This earnings season is the opportunity of a lifetime for those who want to put that opportunity into action. So it's go time. Those of you who have been waiting for the right opportunity, this is an opportunity to change your life. And hey, look, I want to point out one other thing here too. This used to be a 3-month class. I only let people have access for a full quarter. But some people said, hey, Dan, listen, I'm going to be on vacation. I can't make some of the live classes. Can I have access longer? I'm a slow learner. So I said, okay, here's what I'm going to do. Not only am I giving you all those bonuses on the main slide, not only am I giving you the options impact videos, not only am I giving the first 12 of you access to the TradeSmart workshop and giving you 93% off for all of that. But I'm also giving you a full 6 months access. I'm doubling the amount of time that you get access to this all access premium package. So not only will you get access to these 5 live classes and watch me trade live, make our first trades together, but you will also get access to the 5 live earnings trading sessions in July too. Those 5 hands-on training sessions are all 100% totally live. If you can't make it, they're all recorded, but you'll want to watch them as soon as you can so you don't get behind. I'll reveal the top earnings trades of the day on each of the 5 days of those classes. And I'm going to prove that anyone can do this regardless of experience, because you're going to get the options impact videos or account size. So here's my guarantee to you. I'm actually trading these trades live using real money so you can see exactly how it's done and follow along. In fact, I am using less than $10,000 of my account to show you that anyone can do it, regardless of account size. So it's go time, 1, 2, 3, boom. Go to markettaker.com/TED. Meet Jill from Cincinnati, Ohio. She joined our class a couple of earnings seasons ago. One of the first trades that she did together with us in the live coaching sessions. She bought a Microsoft time spread that met our criteria, as did I and the other students. She bought the spread at $2.65, and in less than 24 hours, she sold it for $3.75, locking in a 41.5% profit. And she posted live real time in the MTM community chat room, which you will have the same access to. The MTM community chat room is where all of our top money-making traders log in and post their trades live real time. And look, if all you got out of this class was to watch some of our top money-making traders post their trades live real time so you could follow along, wouldn't this be worth it just for that? Go to markettaker.com/TED. This is David Z from South Lake Tahoe, California. He says, I closed the last 5 at a $1.41 total gain, $425 less commissions. The class has paid for itself. And that was just during Money Week, the week he signed up. This was on one of his first trades. The class paid for itself. This is Russell K. From Glendale, California. He says, I'm above an 80% win rate. Most of the others were maybe a 5% loss. Only 1 total loss out of 16 trades. Like you said, middling is really important, and waiting for the bid-ask spread to normalize. Just waiting that hour made a few of the trades winners instead of losers. That's because I am in the chat room live every day. So the trades that you put on with me during the live sessions, I'm in the chat room telling you, okay, look, the criteria hasn't lined up yet. I'm waiting on exiting my trade. Okay, look, now it has. Boom, I locked in, this profit right now. And this is Tyler M. from Lexington, Tennessee, from one of the favorite emails I've ever gotten in my life. It says, I took Dan's MTM course about 7 years ago in college, and it was my first experience to a structured options trading strategy. He started me down the path that I'm on today. Now I'm a professional options trader at a fund. So whatever your experience level is, if you're brand new to options trading, you're going to get the Options Impact Quick Start video series. If you've been trading for years and years and years, that's okay, because you're going to be able to take it further, because we have trained people to become professional traders. But in order for you to get results like this, you have to do what Tyler did, and what Russell did, and what David Z did, and what Jill did, and go to markettaker.com/TED. Now, I am going to take a couple of questions. If you have any questions on the system that we have just talked about, or if you have any questions on the package that I just described, please go down to the questions box and tell me, please go down to the questions box and drop your question in there. And we're going to make sure that you're able to move forward today. Rich says, are exact trades called out in the chat room? Oh yeah, they sure are. Look, like these are some of the trades that are put literally real time in the chat room. Our students do it. Our top performing students do it. I do it. Some, like there's a number of them, and it's not like we try to keep the access to the chat room, fairly limited because we don't want like a million people just going in there and posting a million things and you can't keep track. So it's a very manageable number of trades. It's a very manageable, group of folks, and they're really nice folks who are very, very helpful. You can ask questions in there, get your questions answered, and you're really going to love it. I've only got a couple of minutes, and so please go ahead and drop your questions into the questions box. One of the questions that I frequently get is this live or recorded? And it's both. Look, I know that everyone has busy schedules. I know you have a busy schedule. You might not be able to make some of the live classes. And so that's why most of this is recorded already. The options bootcamp video is recorded. The master sessions are recorded. If you're one of those lucky enough to be in the top 7 and get the TradeSmart workshop, those are live on Thursday afternoons at 3:30 Central Time, but you can watch the recordings. The live earnings trading setups, I'd like you to try and make those live, but if you can't, those are recorded too. How long do I have access to this class? Only with this special all access 6-month premium package do you have access to this for a full month. Is this time consuming? No, like that's the most important thing. I whittled this down to a simple checklist that literally takes 3 minutes to trade. This will save you time so you can spend it doing the things that you love with friends and family. How do I know I'll be able to do it? I literally posted screenshots of my actual account, and this comes with the hands-on training where I will show you in the live market exactly what to do with real live trade setups. Now, the number one question that we get is there a limit on the number of students who can join? Yes, we have to limit the number of the students allowed in the live component of this package, or else it gets out of hand with questions. I want to give each of you my full attention so you can maximize your success. So we have to limit the number of students we let in. I have a small team committed to student success, and if you're committed to doing your part, we will do ours. And therefore, today, this is limited to the first 30 people who are serious about maximizing your gains this earnings season. Now I'm going to take some final questions. JP says, you close end of day or opening after the earnings report. It's after the earnings report, JP, but like I said, there's like 3 different criteria that must line up before you can close. So there's like a window, but it's the next day. We hold this overnight. It's not day trading. We hold this overnight, but it's a less than 24-hour trade. All right, last chance for questions. I will point out that Monday in 5 days is our first live earnings session, and I want to make sure that you have time to get through all the things that you need to get through in order to participate and really maximize your opportunity in the live training sessions. We're trading together, so go to markettaker.com/TED. And thanks for everyone who joined. I have a few here. I've got Chester, and I've got David, and I've got Morgan, and Roland, and Teresa, and John. Welcome all you new folks, and everyone else. You've got a few minutes. I'm going to leave this this up here for a couple of minutes. If you go to markettaker.com/TED right now and begin completing the online enrollment, you'll be in, and we'll see you in class on Monday. Trade well, and welcome to all the new folks who just joined us. Have a good evening.
Very much, Dan. That was fantastic. We put the link in the chat several times, so I'm surprised you're not sold out. You probably are. You just haven't got them all in there yet. So thank you so much for joining us. You want to keep this up another couple minutes?
No, you can take it down. I think that the people who are taking action are filling it out already, so we're good.
All right. All right. Well, then we'll call it for today. And let's see. Just want you guys to know that this has been a presentation of Traders Exclusive. I appreciate everybody being here. I thank our presenters for joining us today, and I thank you for attending. And I'm going to say goodbye and trade well.